Hello, all of you. Good morning to all. I can see a few comments coming in. Good morning to all of you. Good morning. Good morning. Just wanted to confirm something. Like I'm properly audible, correct? I'm audible at the same time. The screen is visible to you. All good? Hi, hi. Hello, all of you. All right, perfect. So let's start our session. In this today's session, what I'm planning to do is I'm just going to run a quick marathon through our indirect tax topic for our upcoming exam. All right. Now, I'll be discussing all the latest amendments notified by ICA for the next exam. At the same time, my predominant plan is to have a quick revision of all the major important topics for your examination. All right. So I'm assuming that all of you attending this live or subsequently watching the recording, you should already be familiar with the topics in CA Inter because I won't be explaining the topics from the scratch. This will be a quick revision so that you have an overall picture regarding the topics for your examination. That's our plan for this particular marathon. All right, fine. Hello, hello. Yeah, I can see all my students are already here. Good to see you all. Right. Okay, fine. So without wasting much time, I think it's best that we directly jump into the topic. All right. So as I take the class, as I move forward with the session, if you're having any difficulty with regard to anything that you see on the screen, for example, any disruption on the audio or on the video or anything, just leave me a comment. All right. This is the first time I'm running a live marathon through YouTube. Usually I do through Zoom. So I'm just getting familiar with these things. So if there's any issue happening, just leave me a comment or a message and I'll immediately be resolving that. All right. So as discussed, let's quickly jump into our topic. All right. So in today's topic, as I already discussed, we are going to have a detailed discussion regarding the topics for your upcoming exam. Right. Now, when you study GST, the first point that you should have in your mind is identifying the GST impact on a transaction. All right. So for your upcoming examination or your CA Inter exam, what happens is usually they will give you a case, right? For example, let's say there's a person called Mr. Ramu. Okay, there's a person called Ramu. This Ramu engaged in some kind of transaction. And this transaction has another party, let's say Mr. Balu. So there's Ramu, there's a transaction. Ramu is a party to this transaction. There's another party, and that's basically Balu. The question that we are going to ask is whether this transaction will attract GST or not. Right? If it attracts, how will that impact? This is a basic question. This is something that you should always, the next steps that I'm going to give to you, you should always be there in your mind because it's very important for identifying whether the transaction will attract GST or not. Or if at all it attracts GST, what to do next. All those things I'm going to give you in one complete step. All right. So to identify whether the transaction will attract GST, the first thing you have to focus is on that particular transaction. And see if that transaction is a supply or not. That is your first question. Why? Why are we seeing whether the transaction is supply or not? GST. So as I said, the first thing you have to see is whether a transaction is supply or not. All right. So why are we seeing whether transaction is supply or not? Because supply is the taxable event of GST. Unless and until there is supply, there is no GST. Right? So the first criteria you have to see whether the transaction is supply or not. If you get the answer that the transaction is not supply, immediately stop over there. This transaction will not attract GST. There is no further things to be checked. Okay, so how do we know if a transaction is supply or not? Okay, so today the first topic we are going to discuss is going to be supply, but just giving a brief idea, for a transaction to supply, predominantly there should be three conditions. You're all very familiar with that, right? The first condition is there should be goods or service. There should be a goods or service. The second condition is there should be consideration. And the third condition is there should be a business motive. There should be a business motive. So if these three conditions are cumulatively satisfied, we can say the transaction is supply. 100% sure it's supply. There's no doubt. Right. Now, can a transaction be supply even without consideration? Yes, there can be cases. All right. We look into that when we look into the chapter supply. Can a transaction be supply even if there is no business intention? Yes, there is possibility for that as well. We will look into that when we move to the chapter supply. But for the basic concept, if these three conditions are satisfied, the transaction is going to be supplied. This is the first thing you have to see when you get a transaction in front of you. Let that be a question. For example, let it be a question asking you to compute the value of supply or ITC. Whatever be the case, unless and until the transaction is supplied, will not attract GST. This is something that should be cemented in your mind. The first thing, you should have an instinct to first check whether the transaction is supply or not. If it is supply, okay, for the time being, let's say this is a supply. All right, which means, great, the taxable event has triggered. Now comes an important question, whether the supply is a taxable supply or not. That's the next question. Whether the supply is taxable or not. So let me give you a tip. If a transaction is supply, by default, we can assume that it is taxable. If a transaction is supply, by default, just assume that this transaction is basically a taxable supply. All right. Now, how can it be not taxable? For it not to be taxable, this transaction should be specified as an exempt supply. We are talking about a transaction over here, right? We have to see whether the transaction is exempt or not. For that, you should have a clear idea regarding the exemptions. Now, for CA Inder, you need not be bothered about the goods notified for exemption, but you should have a very clear idea regarding the services notified exemption. We have gone to the entire exemption services. We'll be quickly running through that as well in the session, but yeah. All right. Just see if it's taxable or not. So to see if it's taxable, our predominant aim is see if it is exempt or not. Because if it's not, it's going to be taxable. Now, keep in mind, exemptions can happen in three different ways. How? It can be a nil rated supply. All right, the rate of that particular transaction can be nil. Or it can be a supply exempted by notification. As per section 11, the notified exemption, it can be that. Or it can even be a non-taxable supply. What's a non-taxable supply? That 8 supplies. All right, alcohol liquor for human consumption. All right, ENA and rectified spirit when used for the manufacture of alcohol liquor for human consumption. Right, petrol, diesel, natural gas, aviation turbine fuel, crude oil, 8 items. These 8 items are non-taxable supplies. You're already familiar with all this. All right. So this is another tip for you when you're listening to this class. When you find a particular point that you're not very familiar with, after this session, go revise it. So just mark it down. Okay, this is something I'm not very familiar with. I'm not 100% sure what are the non-taxable supplies. Just note it down and go revise it. All right, perfect. So we have this idea whether it's a taxable supply or not. So if it's not covered in any of these three, we can call that supply taxable supply. Great. Now we are sure of one thing. It's a supply and this supply is going to attract GST. For sure. Now, there is one important point that you should keep in your mind. The taxable supply should be done by a taxable person. All right. For example, in my example, Ramu is engaged in a transaction with Balu, right? So, if Ramu is a predominant party, see if Ramu is registered. 99.9% of the cases, all the questions where they ask you to compute GST, the question starts by saying that Ramu is a registered person. All right. So, I hope you're familiar with the term taxable person. What do you mean by taxable person? A person who is a registered person or who is liable to be registered. You study that under the chapter registration. All right, make sure you're clear with that particular point. All right, so we have the taxable person right there. Now, so as I said, I'm not specifically writing that particular point over here because most of the cases, 99% of the cases, the question that they ask, the supplier is always going to be a taxable person. Need not be, much bothered about that particular point. All right, but make sure you just, while you're reading the question, we'll be looking at a few questions as well. So when you're reading the question, just have a quick idea. Okay, this person is a taxable person. Okay, keep that in your mind. Great. All right, so we have that. So we have a supply that's a taxable supply. Great. Now what's the next question we have to see? Okay, somebody has to pay the GST, right? Who should pay the GST? The question is, who should pay the GST? To know who should pay the GST, you have to look at the charge. The next thing you look is, look at the charge. The charge can either be forward charge or it can be reverse charge. Alright. So, what is the default charge? If nothing is given specifically, assume that it is going to be forward charge. So, this is a tip that I'm giving you. If at all you're getting a transaction supply, you can immediately assume, okay, it's a taxable supply. Unless and until specifically notified as exempted. Alright. Now, what is the charge? Assume that it's going to be forward charge. Unless and until it is specified notified as RCM. Now, for CA intermediate students, you have to study only the services notified for RCM. You do not have goods. For example, for CA final, you have to study goods as well. Now, for CMA inter and final, both goods and services are applicable. But specifically, as this session is for CA intermediate students, this is applicable only for you have to study only services. You need to look at the goods. So just see whether this particular transaction is a service and that service is notified under RCM. If it is notified under RCM, the recipient will be the person paying the GST. You are already very familiar with that. In my case, who is my recipient? Balu is my recipient. So Balu has to pay the GST under RCM. If it is RCM. If it is forward charge, who pays? Ramu has to pay. Alright. So I'm giving you one more tip. Okay. Be very clear who is the supplier and who is the recipient. So you might be thinking that's very easy, right? You look at the question, they will say that somebody did something to someone, right? But you have to be very careful. Sometimes you know what happened. For example, let's take the case of sponsorship. In the case of sponsorship, they will say that, let us say, X Limited sponsored and an event conducted by Y Limited. X Limited sponsored. Okay, an event conducted by Y Limited. Here you have to be very clear with a particular point that here X Limited is the recipient and Y Limited is the supplier. You understand what I'm talking about? This is something that we have very clearly discussed for our sponsorship in our sponsorship service discussion. But just keep this in your mind that we have to have a clear idea who is the supplier and who is the recipient. Okay, fine. So once you have that idea, you know that who has to pay the GST. So these are the three things you have to check first. Alright, so we understood the transaction supply. It's a taxable supply. Someone has to pay the GST. Now, again, when you're writing the CA intermediate questions, be very careful. Sometimes for a particular question, they will ask you whether the transaction is a supply or not. If they're asking you if it's a supply or not, ask her, correct. Yeah, we did talk about BCCI example, correct. Alright, so coming back to the case, if the question is whether transaction supply or not, forget everything else. Just focus on this particular point and wrap it up. Okay, this is a common mistake students do. For example, I'll give you a good example. Let's take the example of a person who is selling alcohol for human consumption. Okay, a person is supplying alcoholic liquor for human consumption. All right, he's having that business, and when he's selling alcohol, he's taking money from the customer. The question is whether this transaction is supply or not. This is a question that I very commonly discuss in class. Immediately, many students come up and say, "Sir, this transaction is not a supply." So I ask them why. So there is no GST. I hope you could quickly understand the mistake in this particular point. When a person is supplying alcohol liquor for human consumption, that transaction is a supply because there is good. All right, there is consideration, there is business. All right, the transaction is supply, but that transaction will not attract GST. That's a different question. So you have to answer the question. If they're asking you whether GST will be triggered in a transaction, you have to look at supply and as well as taxable part. But if they're asking you only whether a particular transaction is supply or not, you have to see whether it's a supply only. That's all. All right. Now in some question, you know what happens? They will ask you whether the following transaction is taxable or not. Just focus on the exemption part. Forget everything else. Okay. In some question, they will ask you whether the following transaction under forward charge or reverse charge. There you have to focus only on the FCRCM. Now there can be questions. Decide on the GST impact on the following question. Look at all these points. If they ask you to decide on the GST impact on the following cases, look at all these cases. So I hope that's clear. We understood the charge. Now, what if this question asks you to identify or to compute the GST amount as well? Then we'll have to look at the next topic, and that is basically value of supply. We have a supply, look at the value of supply. Because how do we compute the GST? GST is basically value of supply into GST rate. So I sometimes get a question from the students, sir, should we look at the GST rates? Actually, no. You need not study GST rates because all GST rates will probably be given in the question. Unless and until, let us say it's the case of GTA, because for GTA, you have to study the GST rates. All right. Not just GTA, even the renting of motor vehicle. These are the cases where you have to actually study the GST rates. All other cases, it's going to be really easy. The question will directly give the GST rate. Now we have the value of supply. What is the value of supply? Again, in the following discussion, we'll be having a quick discussion on how to identify the value of supply. I'm not going to detail points, but you might already be knowing value of supply is basically a transaction value, because basically this Ramu and Balu, they have a transaction value, right? Take it, done. That's your value of supply. Will that change? It can change. If the Ramu and Balu related person, it can change. Okay. If price is not the sole consideration, it can change. But luckily for CA interest students, that's not part of a syllabus. Right? You just have to identify whether they are not related and price is sole consideration. 99% is going to be like that, because for CA Inter, you do not have valuation rules as part of a syllabus. So all those topics comes under the valuation rules. So lucky, need to look at that. So coming back to the point, I have my value of supply, and with the value of supply, I am actually getting my GST amount. I got my GST if I have my value of supply. Now comes a very interesting point. Okay, this particular point usually sneaks into question very cunningly, and that point is time of supply. For the particular transaction, please ensure that for that particular month, the time of supply has already been triggered. Okay, what do we mean by that? You're all very familiar with the time of supply. Again, we'll be having a quick revision of time of supply in our session, either today or tomorrow. We have 2 days marathon, right? So today and tomorrow we'll be discussing this. But yeah, we'll be having a quick revision of time of supply. But in time of supply, one very interesting point is interest on delayed payment of consideration. Okay, for example, Ramu and Balu, these are the two parties, right? So let me just quickly run to the next page so you can have a fresh idea. There is Ramu and there is Balu. Ramu and Balu engaged in this transaction, let's say in the month of August. All right. And the question is asking you to compute the GST payable for the month of August. Perfect. You compute it. But they might tell you Balu has paid some kind of interest to Ramu. Why? Because Balu delayed the payment of consideration. As Balu delayed the payment of consideration to Ramu, Ramu has asked Balu, hey, please pay some interest to me, and Balu already paid that interest. Now, when you think of this point, immediately you know what should come to your mind? Section 15, subsection 2, clause D. What is 15(2)D? Any interest, late fee, penalty, etc. received on delayed payment of consideration should be added to the value of supply. You're all very familiar with that. Right. But the important point is the time of supply of that interest is when you receive that interest. So you know what happened? In my example, the transaction happened. Okay. All right. So this transaction happened, let's say in the month of August. But let us say the interest is received by Ramu in the month of, let's say, December. They might give that point in the question. They have asked this for CA final. They can ask for CA inter also. The syllabus is same for this particular topic. So if the interest is received in the month of December, the GST will be triggered only in the month of December, because the time of supply for interest is when you receive it. Got it? So please make sure that in the question, when you're reading the question, try to identify in which month they are asking you to find out the GST payable. In this example, the transaction happened in the month of August. They're asking you what is the GST payable in the month of August. Do not include the interest received in the month of December to compute the GST for the August month. I hope you're clear. Okay, we'll be having a quick discussion on the topic value of supply as well. We'll have quickly revise. My plan is to quickly revise all the important chapters. All right, so it will be much faster than you sitting and reading the entire chapter, because I'll be quickly running through all the points. We'll have a really good revision by the time we're done with this marathon. I hope so. Let's see. Okay, so just keep this in mind. You have to understand for which month they're asking. For that, you should have a clear time of supply. Usually the time of supply happens there. And there's one another important point in time of supply. One tricky point is this interest. You know the other tricky point? Advance. They very commonly test advances. They will say in my example, let's say there is Ramu and Balu, right? Ramu received advance in the month of August. Should you pay GST or not? That's the question. You have to see whether transaction is supply of good or a supply of service. All right. If it's good, what happens? If you're receiving advance, remember notification 66/2017. You studied this in the chapter time of supply. If you're receiving advance for goods, it will not attract GST. If you're receiving advance for goods, it will not attract GST. If you're receiving advance for services, it will attract GST immediately in that month. Okay, fine. I'm really sorry, Sahil. I'm not sure. I'm not even sure who that is. Some other students can maybe respond to that. Okay, fine. So that's not a GST related question. So I'm really sorry. I cannot help you with that. All right. So let's get back to the point. Yeah, I'm talking about advance. Okay, just make sure what your whether the advance is related to goods or related to service. Once you have that idea, it's going to be perfectly fine. If it's goods, it will not attract GST. If it's service, it will attract GST. All right. Again, we'll discuss time of supply. So we have the time of supply, right? Now you have to look at the place of supply. That's the last thing I'll be asking you to look at over here. Why are you looking at place of supply? Because unless and until you know place of supply, you will not be able to identify whether the transaction is interstate or intrastate. To understand whether it's interstate or intrastate, you should have a clear idea what is the place of supply. Okay, for CA intermediate level, that's the only thing you have to focus. If it's CA final, this transaction can be 0 rated. Okay, I'm assuming no CA final students are attending this. So for the kind of my example, so for this example, let's look at just this interstate. For the place of supply, yes, we'll be having a quick revision of place of supply as well. I'll be quickly running through all the place of supply provisions, so you'll have a clear idea what is the place of supply. So as all the chapters that I've shown on the screen, I'll be having a quick revision. All right, fine. So once this many information is clarified by you, you can guarantee something. Yes, this transaction will have GST. You already have the GST amount. You have the time of supply. You have the place of supply. You got the amount. All right. So the first compulsory question that they ask, it's usually compute the GST payable, right? You have to look at all these points in all the transactions that they give. Only then you will be able to identify what is the amount of GST to be paid to the government. All right. So even those comprehensive questions, that's the first question, right? The first question that they ask, compulsory question. So students, what they do is after studying a couple of chapters, they try to attempt that. Please do not do that. Please make sure that you at least complete these many chapters before moving into that. All right. All right. So let's continue to our next topic. Okay. So as I've already given you the brief introduction regarding all these, we are going to start with our first chapter's revision. And first, I'm going to start with the chapter supply. So let's gear up. Let's have a quick run through to the entire chapter supply where you're thorough with all the provisions. All right. So let's start the revision for the supply. So we have taken almost 30 minutes to have a brief introduction regarding what you're supposed to see. Now let's look at one by one. The first chapter, as we discussed, we are moving on to the chapter called supply. So in the screen, I'll be basically presenting my study material. So those students who have it, so many of my students are attending this or are attending the recording. You can definitely look at the study material. If you do not have a material, do not worry. Just look at ICA study material or any study material you follow. It's all fine because it's all basically law, right? All right. So it's all going to be same. Just look at any study material and let's quickly look into it. After I'm done with each chapter, I'll be quickly running through what are the important amendments for the chapters as well. The first chapter, we're going to look at supply. All right. Fine. So how am I going to structure this revision is basically the most important parts in this particular chapter I'll be discussing with you right here. At the same time, some other points I'll just tell you, okay, please make sure you look at this. So if you're not familiar with the topic, just write it down. Just have a detailed look at that later. All right. And most of you students might be having my number for doubts as well. You can just WhatsApp me in case if you have any doubt. All right. Fine. All right. So let's continue. The next, as we discussed, the chapter we're going to look at is basically supply. Okay. Quickly addressing a few comments. I'm really sorry. I'm not that good in Hindi, so I won't be able to take the class in Hindi. I'll be taking the class mainly in English. I'm a qualified chartered accountant, and yeah, I've been teaching. I've in the profession of okay, fine. I'm audible. My the way that I'm talking, you're all okay with that, right? Can you please respond in your comments? You can all quickly follow what I'm saying, right? All the students, you can follow what I'm saying, right? All are good. Everything is perfect, right? It's all good. Yeah. Yes, Oscar. After each chapter is done, I'll be quickly running through a couple of questions on how to approach it. All right, perfect. So let's start with the chapter supply. Okay, let's quickly look at this chapter supply. Okay, fine. And I won't be focusing too much on sections as this is our revision class, but I'll be just quickly running through them as well. In this chapter, we look at the section 7. Okay, the predominant condition. Okay, the predominant condition to see whether a transaction is supply or not. I've already discussed. Just look at the 3 particular points. We have to see whether there is good or service. We have to see whether there is consideration. And the last point is whether there is business motive. Okay, so the first thing you have to see, look at a transaction. There should either be goods or service, there should be consideration, and there should be business motive. Okay, fine. Yeah, the number for this particular, my mobile number for you to ask doubts, I'll just add in the description of this video, or I'll show at the end of the video. Okay, all right, perfect. Now, okay, now when you're studying this, these 3 conditions should be cumulatively satisfied. There should be goods or service, there should be consideration, there will be business motive. These 3 things should be cumulatively satisfied for the transaction to be a supply. Now, what do you mean by goods or service? Please make sure that you study the definition of goods as well as service. Okay, basically anything movable is good, right? Movable will not attract GST, all this stuff. So if you have a clear idea what do you mean by goods, what do you mean by service, please make sure you completely study that. All right, it's a very important definition of goods as well as service. The next thing is look at the definition of consideration. Please make sure you study the definition of consideration, very important. Okay, the thing you have to keep in your mind is consideration can be in kind. Even if it's in kind, it can be a supply. All right, keep that in mind. And the supply should have a business intention. If these 3 conditions are cumulatively satisfied, yes, it supplies. So, as I already discussed, please study the definition of goods. Okay, that is basically section 2 clause 52, service 2 clause 102, consideration 2 clause 31, business 2 clause 17. Make sure you study the definition of all these things. So I'll be giving you an idea of overall which all definitions you should compulsorily study. Make sure you study all these definitions. So we have the transaction supply. All right, this is basically 7.1a. Now, what is 7.1b? Okay, and before that, I would like you to you should actually look at this particular concept of money and supply. Okay, so those who have already, the students who already have a material will have this chart in your book. If you do not have that, I'm just going to quickly give an idea. This is such an important topic. Just keep this in mind that there is A, there is B, 2 parties. If A and B are engaged in a transaction, and this transaction is pure activity in money. If it's pure activity in money, it will not attract GST. There is A and there is B. If it's purely activity in money, it will not attract GST. Okay, what do you mean by activity in money? For example, A gives some money to B, B gives the money back to A. What is that? We can give multiple examples, right? For example, A gave some loan to B. No GST on the loan. A gave some dollars to B, B converted that to rupee and gave it back to A. Again, no GST. Okay, this is the basic concept of activity in money. Now, can activity in money become supply? Yes. There are 2 cases. One, if A is giving its money to B for its use and B is paying back some interest, it will become use of money. Remember? And the separate consideration will become a supply. We cannot say will attract GST. It's a supply. Why I did not say it will attract GST? Because when you look at the chapter exemptions, you already know that interest is exempted. So it's an important point. Keep that in your mind. Okay. The next thing is, let's say A gave some dollar to B to convert to rupee. That conversion will also be a supply if there is a separate consideration, commission charge, etc. Remember that? Yeah. The concept of NB. Just keep this in your mind. Okay. So this point is very important. Usually activity in money is not going to be supply, but make sure that you know that when it becomes supply, when there is a separate consideration. Okay. Fine. So does section number matter? Section numbers do not matter much for examination. If you can write section, good. If you're not sure with the section, it's okay. Just focus on the provisions. Okay, fine, good. All right, so moving forward. So we are done with that. The next thing, as I said, study the definition of consideration, study the definition of business. Okay, the next most important point over here is section 7.1b. This is an important point. There is a section called 7.1aa that I'm not discussing over here. Make sure you study that on your own. I'm looking at 7.1b. 7.1b is very important because we're talking about import of service. Okay. Import of service. Okay. Is import of service a supply? Yes. You have very clearly studied that. Import of service can be supply even if there is consideration, even if there is no consideration. If you have consideration, is that a supply? Yes, it's going to be supply. If there is no consideration, can be a supply? Yes, it can be a supply. But there is two different sections. If it's if you have consideration, this section is section 7 subsection 1 clause B. If there is no consideration, it is 7 subsection 1 clause C, schedule 1 para 4. Right now, we are going to look at this particular case. What if there is consideration? So, quick revision. If you are importing a service and you have a consideration, is that transaction supply? Absolutely yes. What if it's not for business purpose? What if it's for personal purpose? Does not matter. Even if it's for business purpose, even if it's for personal purpose, this transaction is going to be supply. Okay, that's a very important point when you look at the provision regarding import of service. Okay, if you have consideration, even it's for personal purpose or business purpose, the transaction is going to be supply. I hope that's clear. Okay, so this is the point that we're discussing at 7.1b. This I will talk about it when we reach 7.1c. Okay, perfect. Okay, so keep this in your mind. Have a good idea. 7.1b is very important for examination. Make sure you study that. Okay, fine. Next is another very important topic, 7.1c. What is that? Deemed supply. Okay, so what do you mean by deemed supply? Deemed supply is basically a para, that is para 4, schedule 1. And the schedule 1 has basically 4 paras. What are these 4 paras? These 4 paras are 4 different transactions. This will attract GST even if there is no consideration. Okay, that is important point regarding schedule 1. This is a very important topic that they consistently test for examination. So as I already told you, usually there should be consideration for a transaction to supply. But if it's covered under schedule 1, para 1, 2, 3, 4, it will attract GST even if there is no consideration. So let's have a quick revision. What are these 4 transactions? This is very important. Okay, fine. So if you look at the 4 transactions are basically, the first transaction is permanent transfer disposal of business asset. So let me just quickly write it down. Okay, we have schedule 1. That's basically deemed supply. Okay, we have para 1. What is para 1? You have a permanent disposal. You have a Permanent disposal of what? Of a business asset. Permanent disposal of a business asset for which you have already availed ITC. Permanent disposal of business for which I already availed ITC. Okay, for example, I have a laptop computer. I've already availed the ITC of this laptop computer. I'm now giving it to somebody for free. This transaction will attract GST. Okay, there is no consideration, does not matter. Did I avail ITC on that? Yes. If I'm giving it for free, even if I'm giving it for free, this transaction will attract GST. This is basically para 1. Okay, so predominant criteria you have to keep in your mind is, first of all, there should be a permanent disposal. Second one, you should have already availed ITC. That's para 1. Clear. Now, what is para 2? Para 2 actually talks about related persons or distinct persons. Okay, it talks about related persons or distinct persons. So you should, when you are looking at this, please keep in your mind that you should have a clear idea who is a related person. You should have a clear idea who is a distinct person. Please make sure you study that. Okay, so note it down. If you're not very familiar, note it down. Study related person, study distinct person. Okay, so if you have a related person or a distinct person, the point is, let's say there's two parties A and B. If they're engaged in any transaction, even if there is no consideration, as A and B are related persons, this transaction will be a supply. Even if there is no consideration, it will be supply. Okay, but there's an important point over here. What is that? Business intention. Okay, when I discuss para 1, so this is the important exam points. When I discuss para 1, I did not talk about business intention. There is no criteria of business intention in para 1. Para 1 talks about disposal asset. Okay, great, it's going to be supply. But in para 2, there is business intention. Now, this is another important point. In para 1, we are talking about only goods. It's business asset, right? Business asset is good. In para 2, we are talking about goods as well as service. This is the important distinction you have to keep in your mind. Alright, fine. So, that's basically para 2. We have A and B. They are related person or they are distinct person. And if there is any good or service transferred between them without any consideration, it shall be treated as supply. Alright, now here there is one other thing you have to study, very important, and that is basically if these related parties are employer and employee. There is an additional monetary limit of 50,000 rupees. What do you mean by that? If the employer is giving a gift to employee, okay, and the value does not increase, the value is not more than 50,000 rupees, it's not going to be supply. You have to remember that employer and employee are related person under GST. Employer and employee are related person GST. Now, if the gift given between them does not exceed 50,000, that transaction is going to be it's not going to be a supply. Only if it crosses 50,000, it will be a supply. Keep that in your mind. Okay, fine. Now, what is para 3? Para 3 talks about principal and agent. Okay, so let's say there is a principal, there's an agent, there's a customer. Okay, principal is giving some goods to A, that's the agent. Agent is supplying the goods to customer. Now, this transaction between the principal and agent, the question is whether this transaction is supply or not, because there is no consideration when the goods are given by principal to agent. To know if it's a supply or not, the first thing we are going to see is when the agent is supplying that goods to the customer. So this transaction, who issued the invoice? If the invoice was issued by agent, then this transaction becomes a supply. So let's say the invoice issued by agent, then this transaction is a supply between principal and agent. Now, what if the invoice is issued by principal? If the invoice is issued by principal, then the transaction between principal and agent is not supply. This is the basic concept under para 3. Okay, clear. Now, right now I'm talking about principal, agent, customer, where it's the sales of the principal. The same story is applicable even when it's purchase. Now we are talking about the sales. Even if the principal is purchasing something, the same story is applicable. Also keep that in your mind. All good? Perfect. Okay. So I hope so far these cases are clear to you. Now look at the para 4. This is where we have to discuss about import of service. So students very easily get confused regarding this import of service. So the important tip that I give them, basic point that I always talk to them is, if you are importing a service, the first thing you are going to see is whether there is consideration or not. If you have consideration, if you're importing service and if there is consideration, please understand it's going to be supply. Immediately lock it down. It's going to be supply. Okay. What if there is no consideration? Till then it can be supply. But two conditions should be cumulatively satisfied. Both of them should be related person. Okay. And there should be business intention. Okay. Let's say there is a party called A in India. There's a party called B in USA. Okay. So basically what happened was, imported some service. This happened. The first thing you see is if there is consideration or not. If the answer to consideration is yes, done. Transaction supply. Nothing else to be done. And I'll give you one more important tip. When looking for CA intermediate exam, this is where you stop. They will not ask you to compute the GST because this is under RCM and this is not applicable for your inter syllabus. Okay, but just keep it in your mind. It's like they will not ask you further regarding this. The probability of them asking deep into this is quite low. So this is going to be import of service done. Now, if there is no consideration, will the transaction be supply or not? Then it can be a supply. For that, the first thing you see is whether A and B are related persons or establishment of the same person outside the country. You are already familiar with that. A related person or establishment of the same person outside the country. What second condition? A and B should have business intention. Because if there is consideration, it does not matter whether your industry is business or personal. It is going to be supply. That's an important point. When you're importing service, if there is consideration, it does not matter whether the transaction is for business purpose or personal purpose. It's always going to be supply. But if there is no consideration, it can be supply only if it's for business consideration, only if it's for business intention. And I hope that's clear to you. All right, fine, perfect. So we are done with that. Let's move forward. So this is schedule 1. Please make sure you thoroughly understand para 1, 2, 3, 4. Very important for your examination. Okay, done. Next is section 7.1 capital A. I'm not going to detailed discussion regarding that. You should have a clear idea. It's very easy to learn 7.1a. 7.1a basically talks about whether a transaction will be supply of good or supply of service. Go look at schedule 2. That's what 7.1a says. So this is basically schedule 2. Schedule 2 basically gives you a lot of different transactions, and using those transactions or looking at those transactions, you should be able to identify whether it's supply of good or supply of service. Easy, very easy. Have a quick look at that. Okay, that's schedule 2. Now comes one of the most important topics under under this chapter, and that is schedule 3. What is schedule 3? Non-supplies. Okay, so basically there are 10 transactions in schedule 3. Okay, these 10 transactions are basically not to be treated as supply. That is a predominant concept. Okay, these 10 transactions are not to be treated as supply. Okay, fine. What are these 10 transactions? So I'll give you one more important point. Out of this 10, only 8 are important for CA Inter. The balance 2 you look at CA final examination. Okay, we'll have a quick revision. Let's quickly see. The first one, what was it? Any service provided by employee. So I have some charts for this. Let's quickly look at those charts. Here we are. Okay, so quickly revising. Any service provided by employee to employer related to employment. Done. Okay, so if there is an employee and they're providing some service to employer related to employment. So simply put, salary will not attract GST, correct? Salary, all those perks that employer gives to employee under employment, it will not attract GST. All right, fine. Now here I will give you a connecting point. Okay, see, if we have an employer, 1 second, we have a employer and we have an employee. Let's say this employer is giving something to employee. He gave something. The question is whether transaction is supply or not. Okay. The first thing you have to see is whether this thing is to be given by employer to employee as per the employment contract. So definitely there will be an employment contract between these fellows, right? There's a contract. See, the thing given by employer to employee is as per the contract. If it is as per the contract, it is not going to be supply. Why? The point we discussed now, schedule 3, non-supply. Perfect. Now, what if it's given not under contract? It's given not under contract. Let's say it's employee's birthday. There's a gift. That's not under contract. Like, can we add a point in contract that give gift for birthday? No. So that's not going to be under contract. All right. Now, there can even be another point. Let's say this employee is performing really well in the company. Good performance. Employer is really happy. Employer say, hey fellow, hey, take a gift, and giving the gift. So it can be any of these cases. So these cases are actually not under the contract. If it is not under the contract, okay, you have to look at a very important point. You have to see whether there is business intention or no business intention. Why are we looking at this? If there is business intention, then what happens is the schedule 1 para 2 comes into picture. Schedule 1 para 2 comes into picture. Okay, what happens over there? The point we just discussed in schedule 1. If there's an employer and employee, if anything is given free of cost between them, it can be supply. But there is a monetary limit of 50,000 rupees. So if it's less than 50, not supply. If it's more than 50, it's going to be supply. It's saying exceeding 50. So even if it's correct 50 also, it's not going to be supply. All right. What if there is, so I hope you understood this. What if there is no business intention? It's not going to be supply. Why? Because para 2 talks about supply. So let's quickly understand this. Make sure you thoroughly understand this. We have an employer and employee. Let's say I am your employer. You are my employee. I'm giving you something. First question is, am I supposed to give this to you as per our employment contract? If you say, yes, I am supposed to give this to you as per the employment contract, this transaction is not going to be a supply because it's under schedule 3. You can demand it from me legally. It's not going to be supply. What if it's not as per the contract? We do not have a contract. I'm just giving it. For example, I'm giving it for birthday. Or let's say I'm giving it to you for the good performance of the company. The question is whether I have business intention. If I'm giving it to you for your birthday, there is no business intention, not going to be supply. If I'm giving it to you for your good performance in my company, I have a business intention. I'm giving that to you so that you are motivated to work much better in my company. So I have business intention. If I have business intention, then you have to understand that schedule 1 para 2 might trigger only if the gift value exceeds 50,000 rupees in a financial year. If it's less than 50,000, not a supply. More than 50, it's going to be supply. And I hope that entire drama between employee and employee is clear for you. All good. Okay, so that's the first case, service provided by employee to employer. Okay, the next case is actually relatively easy. I'm going to quickly run through that. There's a court or a tribunal. So I'm talking about schedule 3. Schedule 3, non-supplies. There's a court or a tribunal, and this court or tribunal is established under a law. We have a court or a tribunal. They are established under a law. If it's established under a law, any service provided by them is not going to be supply. Easy. Done. Now, next case. Okay. Next case, actually there are 3 different points, but I usually what I tell students is remember them as governmental positions, because any service provided by MLA, MPs, etc. Constitutional positions. I'm talking about president, okay, governor, etc. Member of governmental bodies. All these 3 activities are not going to attract any GST. It's not going to be supply. Third transaction, easy. Okay, the 4th transaction is actually all related to death. So I've put some funeral, burial, crematorium, transportation of the deceased. So if there's an ambulance for transporting dead body, the transaction is not going to be supply. What if an actual patient is being transported? It is going to be supply. If you're transporting dead body, not supply. A patient, supply. But you have to understand that transporting a patient is supply, but when we study healthcare service, we know that it's an exempted supply. All good. So that's also done. Funeral, burial, crematorium, transportation of the deceased. Next, there's a very important entry that I always ask students to have a quick, have a detailed analysis. We're talking about sale of land and sale of building, where the entire consideration received after completion certificate. So let me just quickly give you an example for this. Okay, so to have a quick revision, let's say there's a flat like this. It's under construction right now. Okay, as this is my revision session, I won't be showing all my PPT presentations over here, because those who have attended my class know that it's a detailed presentation. All examples have a story behind them, right? We have a detailed PPT presentation. I won't be able to show that over here, but some parts here and there I'll be able to quickly show some presentation. This is one like that. For example, those who have attended my class know there's a big story behind this. A person going to buy a flat, etc. His friend coming with him, etc. So just forget all the stories. Quickly the example, there's a flat under construction like this. All right. After the construction is over, the flat will become like this. Example, finished flat. How can we conclusively say that the construction is over? We have to look at something called completion certificate, whether we received it or not. If the consideration for this particular flat, some part is received before the completion certificate, the balance is received after completion certificate. So some we received before, some we received after. We can say that this transaction is basically supply of construction service. It is supply. This case is not counter schedule 3. This is not schedule 3. This is going to be supply. But what if the entire consideration is received after issuance of completion certificate? Then we can say that it's not going to be supply. This is under schedule 3. So if you're receiving consideration and this consideration received after issuance of completion certificate, we can say that this transaction is not going to be supply. This is also under schedule 3. Okay, fine. What are the next entry? Next we're talking about actionable claims. So quickly rewinding, we're looking at schedule 3. Which all transactions are not to be treated as supply. Schedule 3. Alright. Now we have actionable claims. Actionable claims, very easy, divided into 2. Specified and others. Others are not going to be supply. What about specified actionable claim? It will be supply. Please have a thorough understanding which all transactions are to be treated as specified actionable claim. We have these 6. Lottery, betting, gambling, horse racing, casino, online money gaming. These 6 are to be treated as supply. Okay, so all other actionable claims, for example, debts. All right, let's say share of, the share in partnership firm, etc. Insurance claim. All these are actionable claims. These will not attract GST. Only this particular point, these 6 points will attract GST. Keep that in your mind. In CA Inter, you need to study only up till now. When you move to final, you have to study the valuation of these 6 as well. Great. In Inter, nothing. Just look at the supply part. These are the 6 non-supplies. As I told you, there are 2 more. All right, fine. And that is point number 9 and 10. 7 and 8 are not applicable for CA Inter. 9 and 10, I will do one thing, as it was a relatively newer points. For example, this was not there in schedule 3 before. This came subsequently, it was added to the act. So as it's a relatively new point, I'll be having a quick discussion regarding that. I'll just give you a brief example of what this point is. Okay, so you might already be having a good idea. So this is for students who do not have a who does not have a clear idea what these 2 points are. Okay, let's say there's a company called LIC. All right, LIC is providing insurance service to a company called ABC. It's a company called LIC, they're providing insurance service to ABC. And the importance of this transaction is LIC is not providing the service alone. There's another party over here. Let's say the New India Assurance. There are 2 companies. These companies are together providing the service to ABC. Okay, so together we call them co-insurers. So what happens is ABC will subsequently be making the payment of premium, right? So the lead insurer will be collecting the premium. Who will be the lead insurer over here? The lead insurer is going to be, let's say for the example, LIC. So the total premium 1 lakh will be collected by LIC. When LIC gets 1 lakh, 60,000 will be retained by LIC. The balance 40,000 will be given by LIC to New India Assurance. So as I said, LIC will take 60, NIA will take 40. All right. Now the entire 1 lakh will be collected by LIC because they are the lead insurer. And then what happens is they will retain 60,000 and they will transfer 40,000 to the company. Okay. So once this entire drama is done, you have to understand that the initial 1 lakh rupee, right, definitely going to be supply will attract GST. What about the share given by LIC to New India Assurance? This transaction is not going to be a supply. That's a 1-line summary. So the apportionment of premium between co-insurers is not going to be supply. All right, but there's a criteria for this. LIC collected the entire 1 lakh from ABC, correct? Yes, LIC should pay GST for the entire 1 lakh. Okay, this is this particular point. If you want, you can have a quick read of that point number 9. Just read it. Just quickly read point number 9 and see if you can correlate that with this example. Good. So just give you a couple of seconds because that's a relatively new provision. So you should be clear regarding that. Not very new. It came a couple of attempts before, but keep that in your mind. Next is point number 10. Okay, point number 10. So this is also again another amendment that subsequently got added to Schedule 3. It's very easy related to insurance as well. Okay, I'll just quickly give you the example. Look at the screen. Let's say again LIC. Let's say LIC is providing insurance service to a company called IKEA. Example, for sake of example. Okay, and IKEA is providing premium to LIC. That entire premium 1.5 lakhs is going to be completely taxable, no doubt. Now LIC, you know what they do? Subsequently, they are availing reinsurance service from another company called Global Insurance, for sake of example. Okay, reinsurance service. Let's say the premium of 75,000. So I'm not going to explain what reinsurance is. I hope you are already familiar with that. Just make sure you understand that. Okay, that's not part of our revision discussion. In the detailed class, we discuss all this, but over here. So there's a reinsurance and the premium is 75,000. LIC paid 75,000 to Global Reinsurance. So they are providing reinsurance service. Okay, now what happens? See, basically, to get this reinsurance business from LIC, this Global Reinsurance might have paid a commission to LIC. This commission is called seeding commission. In my example, it's called seeding commission. And this seeding commission is not going to be supply under GST. That's the basic concept. So the one-line summary is, in reinsurance business, when reinsurer provides ceding commission to the main insurer, that transaction is not to be treated as supply. All good? Fine. So what I would suggest is just quickly read this entry, entry number 10. Okay, and just correlate with the example. See if it's clear. Okay, I hope that's all done. So that's all about schedule 3. There are 2 more transactions. Need to look for CA Inter. You can study for CA final. Okay, fine. Now moving forward, we are moving on to the next case. And there are certain supplies classified as non-supplies by notification. Have a self-study on that. Make sure you study that. Okay, that activity of panchayat is very important. It's coming there for even exemption as well. So keep that in your mind, study that. Okay, now there are supplies given as non-supplies by way of clarification. Already discussed. Just look at this. These are very old clarifications, but they can ask for exam. Very important. Make sure you study that. Right now, there is a clarification regarding subsidiary company and holding company. I have already discussed this in class, and I have discussed it's not very important, but if you have time, just quickly look through it. Okay, done. Now comes the next important point. Very, very important point: composite supply and mixed supply. Okay, composite supply and mixed supply. Okay, this is something that's very consistently tested for examination. Here you have to study 2 things. One, you have to study what do you mean by composite supply, what do you mean by mixed supply. Okay, fine. So I usually give a technique to students. What I tell them is, see, to identify whether a supply is composite, use your common sense. That's what I usually say. Use your common sense and see whether those 2 items are commonly given together. Use your common sense, see if those 2 items are commonly given together. If they are commonly given together, treat them as composite supply. For example, you book a flight, you get food. Common activity, common supply. Okay, do not write this for examination. This is a quick tip that I give. Sorry. That's basically composite supply. If those 2 items are not commonly given together, treat them as mixed supply. Easy. Okay, how do we treat composite supply? Or we treat composite supply as what? Composite supply will always have one supply as its main supply, predominant supply. Principal supply. Treat composite supply as principal supply. And what about mixed supply? Supply that attracts the highest rate of tax. Okay, so to quickly see that, I'll just show that a chart or a diagram over here. So this is a technique I tell students for composite and mixed supply. Okay, we have supply number 1, supply number 2, and they are naturally bundled in the ordinary course of business. That's a key term. But what does that mean? It's commonly given together. That's it. Don't overcomplicate stuff. It's commonly given together. But do not write that for exam. Okay, for exam, this is the point you have to write. Now, of which one supply is your main supply. What do you call that? Principal supply. Great. So what happens next? Treat this entire composite supply as a principal supply. Story is done. For example, you book a train. Okay, you book a train and you get a food. Or let's say you book a hotel room. You get breakfast. Right, it's a composite supply. What's the main supply? Did you go to that hotel for having breakfast or sleeping? You went for sleeping, right? That's your main supply, principal supply. Treat the entire supply as a supply of room. Easy. Now, what about mixed supply? Now, mixed supply means there are multiple supplies. They are bundled, but they are not a composite supply. Artificial bundling, that's what we call them. Artificial bundle. How do we treat them? We treat that particular transaction as a supply with the highest rate. That easy. Okay, so if you understand that, the definition of combust and mixed supply. Okay. Okay. We will have short breaks after each chapter, like 5-10 minutes. And I'm planning to give you a longer break around 1 o'clock. And how long the marathon will go on, I'm not exactly sure. We'll have to see. As long as my energy lasts, we'll go. Okay, that's the plan. Let's see. My plan is to give you maximum output in two sessions. That's today and tomorrow. Maximum. Anyway, definitely not 100% coverage because we just have 2 days, but maximum coverage. That's my main plan. Let's see how far this go. And I'm assuming that so far this session is really useful for you guys, correct? Because I'm assuming that you'll be able to revise it much faster than you do on your own. And I'm also assuming that you're getting a clear idea which all topics you're supposed to focus on. And once we're revising, you will be having a clear idea which all topics you are not having a clear idea. So that's my basic plan. All right. So let's see. Let's see how it goes. Okay, fine. So that's basically mixed supply and composite supply. Okay, perfect. So have a thorough understanding. That's very important. Okay. Done. Now moving forward. We're discussing combust and mixed, and I want you to look at all the clarifications under combust and mixed supply, specifically under composite supply. Okay, that clarification of printing. Make sure you have a thorough understanding regarding that. Okay, it's important. Okay, fine. And all the clarifications under that. Okay, under composite and mixed supply, make sure you study that. It's important. See, once you have a clear idea about the provision, the clarification becomes much more easier. Okay, so important amendment clarifications I'll be discussing over here, but all these small things just keep in your mind. You have to study them. Okay, done. Right. Now, the next thing that I want you to look at is this point. Okay, this free samples and gift. Always keep this in your mind. Free samples and gifts are not going to be supplied. Please understand that. Keep that in your mind. It's very important because students keep getting consuming about free samples. I'm giving a free sample of my product. I'm giving a gift of my product. It's not going to be supply. Why? There's no consideration, man. There's no consideration. How will it be a supply? Okay. Now, the interesting point is buy one get one offer. All right. So if you look over here, okay, let's say in my shop, there is a buy one get one free offer, which means you come to my shop, buy one dairy milk, you get one dairy milk as free. Okay, what happens over here? If we are getting one dairy milk as free, the doubt is whether this free dairy milk is a supply or not. Okay, the answer is actually very important. It's actually a supply. Even if there is no consideration, it is supply. Why? Because if you come to my shop and you ask me, hey, you're giving one dairy milk free, right? I said, yeah, I'm giving you one dairy milk free. Then please give me that free dairy milk. If you ask like that, will I give you that? Absolutely not. You have to buy the one product to get the other product free. All right. Which means here, 2 items are given for the price of 1. This is an important clarification. Keep that in your mind. 2 items are given for the price of 1. That's an important clarification. Keep that in your mind. All right. Perfect. Now just a second. I want you to just look at one simple question. This is a very easy. The questions from this chapter are going to be relatively very easy. Okay, because what they do is they quickly ask you whether a transaction is supply or not. Okay, those clarifications are important. I'm just looking at the most tricky one. That's very easy to understand. The other clarifications are easy to understand. That's why I'm not specifically discussing that in class. You have to look at that. But in this revision session, if I go with each and every clarification, I won't be able to complete maximum topics. Okay, so the most trickiest one, I'm basically focusing on the most trickiest ones. So I can give you a quick revision on that. Okay, I'm just giving you one simple question. Look at the screen. Okay, this question was asked in 2026 Jan. Okay, and the question is really easy. We are trying to see whether this transaction is a whether the following transactions are covered in which schedule. Just quickly look at this. Just take 2 minutes. Look at this question. Okay, are you able to get the answers? Like 5 marks. Really beautiful question. Very easy. Okay, state in which schedule the following supplies have been covered. Okay, very direct question. Also determine the category, whether it's supply of good or service or deemed supply, which shall be classified. For first case, service by any court or tribunal established under any law for the time being enforced. Which schedule is it? It's schedule 3. It's not a supply. Schedule 3, it's not going to be supply. Right? Done. Next, any treatment or process which is applied to another person's good. This is something I have already asked you to study on your own. This is under schedule 2. Under schedule 2, I did not read through the entire schedule to ask you to look at it. Schedule 2, and schedule 2 actually says that this transaction is basically job work and its supply of service. Okay, next one. Goods forming part of an asset are transferred or disposed of or under the direction of a person carrying on the business so as no longer to form part of these assets. Do you remember where this is from? This is from schedule 2. Make sure you have a clear understanding of schedule 2. Just read, it's very easy to understand schedule 2. I told you what schedule 2 is, right? There are certain transactions. We look at them and see whether it's supply of good or supply of service. So this is also supply of good. Then there is sale of land. Where is sale of land covered? Sale of land and other immovable properties. It's under schedule 3. Not supply. This transaction is not going to be supply. Next, permanent transfer or disposal of business asset where input tax credit has been availed on such assets. Easy. Very easy. Okay, where have you seen this? This is basically schedule 1. Schedule 1, and that's going to be supply of, it's basically deemed supply. It's basically deemed supply of that particular good, even if there is no consideration. So make sure that you have a clear understanding regarding all these different schedules. And please, in my class, you might have noticed that I keep asking you about what is schedule 1, what is schedule 2, what is schedule 3. The reason for that is you might have to write it down like this. You might have to, the question might ask you to identify which schedule is it from and what is the transaction. So make sure you have a thorough understanding regarding this. Okay, now if you look at the 25 May question, look at this question. It's very easy. Again, direct question. Let's look at this question. See if you can get the answer for this. All good? So, as per Section 7 of the CGST Act, for the purpose of goods and services, the expression supply includes all form of supply of goods, service, or both. Sorry. Okay. Supply of goods or service or both. And disposal made or to be made of concession. This is basically they are giving you 7(1)(a), that entire sentence. Discuss are the provisions of CGST Act 2017 when an activity can be treated as supply even if there is no consideration or even if not in the course of furtherance of business. First question, can a transaction be supply if there is no consideration? Yes, perfect. Schedule 1, write all for para, you get the marks. Okay, now there's one more case. Can a transaction be treated as supply even if there is no furtherance of business? Yes, import of service with consideration. Right, that's it. Okay, so make sure you have a thorough understanding of all these topics. You'll be able to quickly look at this particular topic, particular chapter. Okay, so I hope with that, let's say we took almost 45 minutes. In almost 45 minutes, we have had a reasonably good coverage of the chapter called supply. So you know what supply is, you have an overall idea. Now you might also be having an idea of where all you are a bit more weak and which all where you have to revise. I've not looked at all the clarifications, but make sure you look at all the clarifications. Just 1 second before moving forward. Okay, in this particular chapter, for this chapter called supply, there are no major amendments for the September exam. So after each chapter is done, I'll be talking to you regarding the major amendments. So this particular chapter does not have any major amendments. So you should be very easily able to deal with this. All right, fine. So let's do one thing. Let's take a, there are no amendments. Okay, fine. Let's take a 10 minutes break. Okay, after the break, we'll come back and resume our session. All right, so let's take a break. Bye. 10 minutes. Just quickly revise, quickly get fresh, come back. All right. So let's continue. Okay. Let's jump on to next chapter. Okay. So before moving on to next chapter, as I told, there are no particular important amendments for the chapter supply, but the following the next chapter that we look at, for example, charge, definitely it has amendments, a few amendments. And when you look at those amendments, you can actually do something. I prepared a separate PDF like this. This is for CA under September. Okay, so you can actually use this PDF, and if you want this PDF after this class, you can just give me a message. Just leave me a WhatsApp message and I'll share this to you. This is my mobile number in case you do not have that. All the students who are attending, you already have my number. Else you just give me a WhatsApp message in this particular number. Okay, and I'll be sending you the PDF in case you want that, if you do not already have that. Okay, so this amendments, only very few amendments have specifically come for the September attempt. The attempts that the amendments that have notified for May, they have not very specifically tested for May exam. They will ask for September also. That's possibly for that. So I've combined both amendments and made one PDF. You can ask this. I'll send it to you. Okay. So if you need not even look at this PDF, you can just look at your ICA website and you can get it over there. All right, fine. So if you look over here for the particular chapter supply, I have not added any amendment. So that's fine. Let's look at the next chapter, charge. Okay. Okay, charge is a easy chapter, but you have to thoroughly revise it multiple times. Okay, when you study for the first time, it can be a bit confusing, but it's actually very easy to understand. But once you get the idea, make sure you have a thorough understanding about this chapter, revise it thoroughly. Okay, because you can keep forgetting. Okay, in this chapter, there are basically, we are studying just one section, that is section 9. Section 9, 1, 2, 3, 4, and 5. After the sections, the most important ones that you have to thoroughly prepare for exam. Okay, is basically 9 subsection 3 and 5. These are your most important sections. Okay, 9 subsection 3 and 9 subsection. Okay, fine. I was just looking at the live status, seeing if it's going okay, and I think everything is fine. Okay, 9 1 9 10 9 5. Okay, fine. First, let's look at 9 subsection 3. What is 9 subsection 3? It's basically reverse charge mechanism. Okay, reverse charge mechanism, and they have notified both goods and services, but for your examination, you have to focus only on service. Goods are not important. So we are just going to quickly look at all the services notified under reverse charge mechanism. Let us see. Okay, fine. Now, okay, this is notification number 13 by 2017. That's where services are notified under reverse charge. So the first one is insurance agency service. Really easy. Nothing much to be detailed. Have a detailed discussion regarding. There is no detailed discussion required. If an insurance agent is providing any service to a person carrying on insurance business, it's under reverse charge. So who pays the GST? The recipient, the insurance company pays the GST. Okay, that's it. Done. Okay, next. Recovery agent service. Okay, who is the supplier? Recovery agent. The person who recovers loans and other amount to be received by the bank. Recovery agent. Who are they providing service to? Let it be a banking company, NBFC, financial institution. It's going under RCM. Again, relatively easy. No much detailed discussion needed. Okay, next is something that you should have a clear idea about: sponsorship service. Okay, in sponsorship service, the idea that you should have is, for example, let me give you a quick example for this, so it will be easy for us to quickly look at it. Okay, let's say there's a company called Byju's, okay, and they are providing sponsorship, or they are giving they're sponsoring Indian cricket team for sake of example. So I have BCCI and Byju's over here. Okay, so the first thing you have to understand is here the event organizer will be the person providing the service and the sponsor is the person receiving the service. This is the first point you have to keep in your mind. This is what I told you in the first session. You have to have a clear idea about who the supplier, who the recipient is. Okay, now what is the charge? Who should pay the GST? To understand who should pay the GST, the first question you have to ask is who is the supplier? If the supplier is a body corporate, it's going to be under forward charge. If the supplier is not a body corporate, then you look at the recipient. If the recipient is a body corporate or a firm, it's going to be under reverse charge. All other cases going to be under forward charge. That's a very easy point to remember. So again, if you're getting a sponsorship service, first of all identify who the supplier is, who the recipient is. Once that's thoroughly done, just look at whether the supplier is a body corporate or not. If the supplier is a body corporate, so if you cannot see the chart, I'm just, if the supplier is a body corporate, the charge is going to be forward charge. All right, it's going to be forward charge. Now, what if supplier is not a body corporate? If the supplier is not a body corporate, then look at the recipient, the person is sponsoring. If he's a body corporate or a firm, that's important point. Body corporate or a firm. In supplier's case, we did not look at the firm part. In recipient, we are looking at both body corporate and firm. And wherever I talk about firm, LLPs are included. Okay, it's going to be under reverse charge. So those who have my study material will always have this chart in your book. You can look at that. And you can just look at the screen and have a quick revision. Just giving you a couple of seconds so you can just quickly go through that. Keep that in your mind. That's all about sponsorship service. Okay, fine. Next, who are we looking at? We're looking at director. Okay, very easy concept. If there's a director and this director is providing a service to the company, like the company in which this person is a director, it's going to be reverse charge. So who pays the GST? The company pays the GST. But even though we look at this provision, you have to have a clear idea that here the director, when he's providing any service to the company, most of the directors might be employees of the company. So what happens if a director is employee? What he receives is basically salary. If you're receiving salary, we already discussed schedule 3, it's not going to be supply. So under schedule 3, not a supply, easy. Okay, what if he's receiving an amount not under employment contract? How do we recognize that? You're already familiar with income tax. Just look at under what section is the TDS being deducted. If it is deducted under 192, we can be sure that yes, it's basically going to be salary. Okay. If it's under any other, it's a professional 194J, we can say it's not going to be salary. It's a professional charge. Then it's going to be RCM. So if you look over here, again, in your study material, you'll be having a chart. I'll be just showing the same chart over here. Yeah, this chart is what you have to look at, right? So if you have a director, it can be an employee. If you're an employee, look at the remuneration. If the remuneration is salary, so 192 TDS will come. It's not going to be supply. If it's anything other than salary, 194J will come. It's going to be supply and it's going to be RCM. Easy. Okay. Now next question. What if this person is not at all an employee? How can that be? For example, what if it's an independent director or a non-executive director? Definitely, independent directors are not going to be employees of the company. So it's going to be supply and the tax is going to be under reverse charge. It's very easy. Keep this in your mind. Okay. Now here there's one other important point. Any service provided by a director to companies under RCM, if it is supply, you already got that. Now, these services must be provided by the director to company in the capacity of director. Any other capacity, it's not going to be RCM. For example, let's say I'm a director of your company. Okay, I'm a director of a company and I'm providing you some service. And we immediately say, hey, just that's going to be under reverse charge, right? But you have to understand something. What if I am renting an immobile property? For example, this company needs a warehouse for storing its goods. and me being the director, I have a couple of buildings under me in my ownership. So I decided I'll give one building for rent to my company. Now it comes an interesting point. This service is not a service necessarily to be done by a director. Any person can rent a building to a company. So here, when I'm renting the building to the company, I'm not doing that in the capacity of a director. Got the idea? In that case, this particular portion will not be applicable. It's not going to be under this particular. We will not treat it as a service provided by director to a company. So we will be thinking, oh, okay, it's not going to be under RCM. I hope that's clear. But one very important matter to keep in your mind. Okay, listen to me very carefully. What did I tell now? There's a director. I'm a director. I have a building under my ownership. You ask for the building, I'm giving it to you on rent. So we discussed that any service provided by director to a company, okay, is under RCM. But this is not a service provided by director in his director capacity. Clear? So we are saying, okay, that need not be under RCM, right? Okay, that's correct. But please keep in your mind that renting of immovable property other than residential dwelling will come under RCM. Got the idea? They asked this for exam. Renting of immovable property other than residential dwelling will come under RCM. Where will it come? We'll look at it subsequently. So that RCM can trigger. To be very clear with what you're studying, here when I'm renting an immovable property to you, that transaction is not a service provided, a service to be provided by a director. So that's fine. Great, leave it. But if I'm renting an immovable property, that transaction is separately counted reverse charge. So that can come. Keep that in your mind. Okay, that they ask for your exam. So please, I hope that's clear to you. Okay, first that's all about director services. Okay, the next service that we have to look at is basically business correspondent, business facilitator. So for that I have again one more chart in my material. You can quickly look at this chart. Okay, I have a business facilitator or a business correspondent. A business facilitator or a business correspondent. Okay, now what happens? When this facilitator is providing any service to the bank, it's going to be under reverse charge. Great. Now, this business facilitator, again, I'm not going to detailed discussion who facilitator is, who agent is, etc. I'm not going into that. Now, this business facilitator, he is having an agent working for him. This is not covered in reverse charge. So charge is going to be forward, easy. Now, when the business correspondent is providing service to bank, it's under forward charge. What if an agent is providing service to business correspondent? That is under reverse charge. So you have to understand that here basically the RCM provision is triggered only in two different locations. One, business facilitator providing service to the bank. The second one, agent providing service to business correspondent. Okay, keep this in your mind. Just quickly look at it, make sure it's clear to you. Again, I'm not showing you the detailed PowerPoint presentations or examples regarding this. That will take too much time. I'm just going quickly looking at the provisions. So as I already discussed, this session will be particularly helpful for you if you're already familiar with the topics and you need a quick revision. Okay, done. Great. Now you have to understand that all these services are going to be exempted if the bank is in a rural area. In a rural area, all these services are going to be completely exempted. Keep that in your mind. Okay, perfect. Let's move forward. Next service is direct selling agent. Direct selling agent. Okay, fine. Another type of agent. Now, direct selling agent when they're providing service to a banking company. So I'm just showing you the chart. If you're looking at ICS statement, you get the detailed table over there. By detailed table, I meant if you look over here. Okay, like for example, see. Direct selling agent provides service to banking company, NBFC. It's given detail like that. Okay, and one more important point. If you look at the table, you can see that all the recipients are located in taxable territory. So what if they are not located in taxable territory? If they are not located in taxable territory, which means they should be in outside India, correct? Okay, there's a chance of it becoming zero rated supply export. Again, for your CA inter level, please understand that the RCM triggers only if they are in the taxable territory. If they are outside taxable territory, forward charge. But there are other complications with that. That's not applicable for CA inter examination. So it's fine. Okay, fine. So let's look at the direct selling agent. Okay, now direct selling agent, it's very easy to learn. If the supplier is an individual, it's going to be reverse charge. Okay, if it's a firm or LLP or a body corporate, it's going to be forward charge. As easy as that. So if the direct selling agent providing service to a bank, you have to look at the supplier. Understood? In the case of sponsorship, what happened? First we looked at the supplier. Then if supplier is not a body corporate, it will be the recipient. In the case of direct selling agent, look at only supplier. That's it. Okay, done. Now, if it's an individual, it's going to be RCM. Other cases, it's going to be forward charge. Easy? Revision done? Great. Okay, fine. Now, one important thing you have to remember is, imagine there's an institute called XYZ. So you might all be studying your CA in some institute, right? Let's call it institute called XYZ. Okay, and there's a person called Balu. Balu is providing direct selling agent service to XYZ. Balu is an individual. They can ask you for a question, what is the charge? Now what happens is, you know what happens? Students look at this and say, hey, Balu is an individual. And this is going to be RCM. Is that correct? No. Why? Because individual direct selling agent, when they're providing service to a banking company or NBFC, is going to be RCM. Any other case, it's going to be forward charge. Which means if XYZ is an institute, this is going to be under forward charge. So keep that in your mind. This is how they trick you for the exam. They will ask you, will your answer be different? Okay, instead of banking company, it's a institute, private institute. In that case, it's actually going to be forward charge. Just keep that in your mind. Okay, done. The next thing is basically copyright. Okay, transfer of copyright. So to understand transfer of copyright, what I usually tell students is look at transfer of copyright. Basically, there are going to be 5 different types. Quickly revising. Okay, what's the first type? First, we're looking at a music composer. Okay, next I'm looking at photographer. Okay, next I'm looking at artist. Next I'm looking at author. Other cases. In the first 4 cases, the charge is reverse charge. Okay, so you have a music composer. He's let's say transferring the copyright of music to someone else, or there's a photographer or an artist or no other. All the first 4 cases, the charge is going to be RCM. Okay, fine. All other cases is going to be forward charge. Now, in the first 4 cases, you have to thoroughly read the provision and quickly revising. In the first 4 provisions, if you look at author, he has a special case. Author can opt for forward charge. When? If 3 conditions are satisfied. Just look at the material, study those conditions. Okay, if the 3 conditions are satisfied, author is going to be under forward charge. Easy. Done. So that's also quickly done. We're done with author. Next is actually government service. Okay, so now the students have already studied, they know that government service is actually a bit tricky. Okay, there are too many transactions coming into the picture. So how do we deal with it? So usually the idea I give to students is I actually give them a couple of charts. Right? So I'm going to quickly discuss those charts over here. So by looking at the charts, you will be able to understand how to deal with the reverse charge of government service. It's very easy. Just focus on the charts. The first service that I teach is basically postal department service. Service provider, postal department. So if you look over here, instead of looking at the entries, you know what happens when you look at the entry and study to by heart, it's actually very tricky. They will tell you so and so transaction under RCM, and they will tell there are following exceptions to that. So if under RCM notification something is given and there's an exception to that, then exceptions become forward charge. So it becomes overly complicated. So to simplify it, I'm just going to give you a couple of charts. So the students who are like those who have my study material, these charts are already over there. In case you do not have the study material, the best thing is just write it down. Okay, fine. So look at the screen. Service by post office. Who is providing the service? Post office is providing the service. There I'm providing it to, when I'm providing those services, I'm dividing it into 2. In the left box, I have given 4 services. Just quickly read the services. Easy? Yeah. These 4 are very basic services that you get from postal department. And the provision says it's going to be exempted. You can provide it to anybody you want. Business, non-business, government, it's going to be completely exempted. But if it's an ordinary post, make sure that the weight of the ordinary post is less than 10 grams. So when you go to post office, they weigh the envelope, right? The weight should be less than 10 grams. It's going to be exempted. Easy. Like, what about any other service provided by them? Any other service by postal office is going to be taxable. Okay. If it's taxable, I already told you we have another question. Who pays the tax? It's going to be forward charge. The department pays the charge. Do we have any limit for exemption? There is no limit for exemption. This limit means exemption limit. There's no limit for exemption, which means there is no monetary limit. Any amount you pay for speed post or express parcel post or registered post, it will attract GST under forward charge. All good? Easy. Okay. So that's the service provided by post office. Now, there are 2 services over here. If you look over here, service in relation to aircraft or a vessel. Okay. Inside or outside the precinct of an airport or a port. Okay. So that service is not something that is related to common man. So we always say that taxable forward charge, no limit. Quickly done. Okay. Now, the next service is transportation of goods or passengers. Here you have to be very careful. Because for transportation of goods or passengers, there is already exemptions. Where can we get the exemption from? Go study exemption chapter. For example, if you're transporting passengers through railway, through the bus, the state undertaking bus, etc. All those cases are already covered. So under that chapter, which means if you have done with that, you know when it is taxable or exempt. You know that. Look at transaction, you can say, okay, it's taxable, it's not taxable. You know that, how to get that. Now, if it is taxable, once you determine that, okay, this transaction is taxable, then you need the charge. You look over here, charge is going to be forward charge. For example, railway AC is taxable, non-AC is exempted. So non-AC you leave it. Once you move on to AC, if it is taxable, the charge is going to be forward charge. Easy. Okay, that's also done. Then comes the first tricky part. Okay, that is renting of immovable property by government. When government is renting immovable property, the supplier can be any person other than Indian Railway. The supplier is any person other than Indian Railway. So what happens if Indian Railway is renting the removable property? That's coming. We'll look at that later. But before that, anybody other than Indian Railway, what happens? If you're renting an immovable property, anybody other than Indian Railway, the first question you have to ask is whether you're providing service to a business entity, non-business or government. If the immovable property is rent to a non-government or, if it's rented to a non-business or to a government entity, it's going to be completely exempted. Easy. Okay. What if it's provided to a business entity? Immediately it's going to be taxable. So for example, let's say there's an immovable property owned by government. Somebody is going to rent it out. Let's say, take an example for town hall. The town hall owned by the government, somebody is renting it out. If another government is renting, it's going to be exempted. If a non-business entity is renting, it's going to be exempted. If a business entity is renting, it's going to be taxable. If it is taxable, we have follow-up questions, right? Whether it is forward or reverse. To understand that, look at the recipient. If the recipient is the registered person, it's going to be RCM. If the recipient is an unregistered person, it's going to be forward charge. Easy. So that's the basic chart. Just have a quick look at the chart, see if you can understand it. There is a limit of 5,000, not very important for exam. Not important. Look at the provision. Okay, I think you understood it. Next, we're looking at service by Indian Railway. So I'm specifically talking about renting of immovable property. Okay, so when Indian Railway is providing the immovable property, so I give an example for this. when you go to railway station, you can see a lot of shops inside railway station, right? Who owns these shops? Those buildings or that property is owned by Indian Railway. The shopkeepers are outsiders who come to Indian Railway, rent the shop and sell their goods. Okay, how do you identify the charge of this? See, usually when a government is renting out the immovable property, we have to see whether the recipient is a business, non-business, all those, etc. We have to check it all those, right? But if the immovable property is run by Indian Railway, do not look at who the recipient is. Completely forget about that. It's going to be taxable immediately. It can be business entity, non-business entity, or even a other government. First of all, predominantly it's going to be business entities, but it's always going to be taxable. So what is the charge? It's always going to be forward charge. Like in the case of other immovable property, we have to see whether the recipient is a registered person or not to look at the charge. Here there is no such drama, just it's always going to be forward charge. What's limit? There is no limit. Easy. Done. What about other services? Okay, other service by Indian government. The recipients are divided into three: business, non-business, government. If any other service is provided by government, to other government, it's going to be exempted. To other business entity, non-business entity, exempted. What if it's a business entity? I am dividing the recipient into big or small. So those who have already attended my class know what is big or small is. Do not write this for examination. When I say big, what I'm talking about is their previous year turnover exceeded the threshold limit for registration. Their previous year turnover exceeded the threshold limit for registration. That's the meaning of big. Small means previous year turnover is less than threshold limit. That's it. So if your previous year turnover of exceeded the threshold limit for registration, it's a big entity and this is going to be taxable. Okay, what if it's small? It's going to be exempted. If it's taxable, what is the charge? It's going to be RCM. Anyway, they are big business, right? Huge turnover. Let them pay the tax. And here there's a limit. This limit is important. They have checked for examination. Or even for the main question, they have checked this limit. The limit is 5,000 rupees for a financial year. So even if the recipient is a big business entity, if the amount that they charge is more than 5K, it's going to be completely taxable. Okay, so that's a quick revision regarding reverse charge mechanism of government service. So let's try to quickly see if we can remember all this. How do we look at it? First, postal department. Remember there are 4 services in that box. Always going to be exempted. All the service taxable. Okay, that service related to aircraft over a vessel and transportation of goods or passengers. We can finish in one shot. How do we finish in one shot? Always taxable, forward charge, no limit. Now, when you're renting immovable property, it's other than Indian Railway. Okay, what happens then? We have to divide the receipt into 3: business, non-business, government. Government exempted, non-business exempted. Business, it's going to be taxable. Who pays the tax? Look at if the receipt is registered or not. Registered, RCM, unregistered, forward charge. Done. All clicking. Now, what if Indian Railway is renting the remote property? Always taxable, forward charge, no limit. Now, what if the immovable property is rented out by, what if any other service provided by Indian government, state government or anybody, government? Divide the receipt into 3: business, non-business, government. Government exempted, non-business exempted. Business split into big or small. And as I told, do not write big or small for examination. You're looking at the previous year turnover is more than threshold limit or not. More means big. It's going to be taxable RCM. Small means exempted. Done. So if you study these charts, you should have a very clear idea regarding RCM of government services. Okay. So I hope that's clear. So see, quickly in like 5-10 minutes, we have completely finished government service. When you study it for the first time, it can take you like, for example, 1 hour to 2 hours. Okay, but we are quickly revising it. Fine. Let's move forward. Next, we're talking about legal service. We're talking about legal service. Now, legal service, we are talking about advocates or firm of advocates. I've prepared a quick chart for you, very easy to understand. This is something that is very commonly tested for examination. Okay, if the advocate is providing service to a non-business entity, exempted. Business entity, taxable. When? If the business is big. So let's go with line by line. First, non-business, exempt. Government, exempt. So if an advocate is providing service to government, whatever fees he gets is going to be exempt from GST. Now, what if recipient is a business entity? Again, it's going to be exempt, but only if the business is small business. We already discussed what we mean by small. Okay, now what if the business is a big business? It's going to be taxable. And what is the charge? RCM. Okay, so if the recipient is non-business or government, it is going to be exempted. If the recipient is business entity, you have to see if it's a big business or a small business. Big business, taxable. Okay, and charges RCM. Small business exempted. Now, what if one advocate is providing service to another advocate? It's going to be exempted. Easy. So I hope that's completely clear to you guys. Okay, now when we're looking at advocates, there's a special category called senior advocate. Category called senior advocate. What if senior advocate is providing service? If the service is provided by senior advocate, we see whether the recipient is an advocate or not. The reason I'm asking you to do that is the initial part is exactly like advocate. See, non-business exempt, government exempt, business small means exempt, business big means taxable RCM. Exactly like normal advocate. The only difference is we are not talking about the recipient being a advocate. So question, what if recipient is advocate? Read this point. We have to see whether that advocate is a big business or small business. If it's big business, it's going to be taxable. And RCM, small business exempted. Easy? Done. So just look at these charts. You should be able to quickly study regarding advocates. Let's quickly look at it. So I'm just giving you a couple of minutes so you can just quickly have a read, revise, keep it in your mind. All good. Okay, fine. Now, the next thing you have to keep in your mind is arbitral tribunal. Okay, arbitral tribunal. So what is the important thing to be looked at over here? First of all, you have to understand that earlier we had discussed that any service provided by tribunal, is basically not going to be supply. Okay, established under any law. But when you study that, you have to understand that arbitral tribunals are not established under law. They are established under a contract. So what happens if you are established under contract? It actually becomes supply. Okay, now if arbitral tribunals are under supply, then who pays the tax? Whether it's taxable or exempt, that's his charge. Now to quickly understand this, please remember this is exactly like senior advocate. That's a quick tip. Exactly like senior advocate. So which means non-business exempt, government exempt, business, see if it's big or small. Big means taxable RCM, small means exempted. All right, done. Okay, just have a quick look. Done. Next, we're looking at GTA. Okay. Now GTA, right now I'm going to give you an overall picture. Okay. GTA is very important for your examination. I'm going to give you a one-shot picture of GTA where it has impact on multiple chapters. Okay. Listen to me very carefully. Understand this thoroughly. Then we'll move forward. Okay. Fine. So first of all, this is going to be really helpful for you to quickly understand the entire topic of GTA. As is a revision session, I'm directly jumping into the exemptions as well and finishing it in one shot. Okay. GTA means what? Goods transport agent. How can you call someone as GTA or not? It's very easy. The transportation should be by road. And there should be something called consignment note. The transportation by road and there should be something called consignment note. Clear? Fine. First question is whether GTA is taxable or not. Okay. First of all, that supply part is done, look at the taxable or not. To see if it's taxable or not, please understand that GTA has two types of exemptions. Okay. One is based on goods. I call them goods based. Goods based exemption. They also have recipient based exemption. What do I mean by that? For example, let us say there's a person called, let's say, Somu. Somu is a GTA. Okay. So by GTA, it means that he has a truck. Imagine this is a truck. Okay. And he is providing transportation of goods service. Transportation of goods service to Balu. Okay. To Balu. We are trying to see whether this transaction is taxable or not. So understand that there can be two types of exemption. The first is, as I said, goods based, which means look inside the truck. See which good is being transported. There are certain types of goods that's already listed in notification 12/2017. So what I'm asking you to do is go and look at the exemptions related to transportation of goods. There are certain goods, for example, milk, salt, agricultural produce, relief materials, organic manure, defense material, etc., etc., etc. Look at this material. If those materials are being transported, this is going to be completely exempted. Done. It's clear? It's going to be completely exempted. So look at the good, there can be some exemption. Now we looked at the good. You understood that it's not a notified good, which means it's going to be a taxable supply, right? But there is one more possibility of exemption. Look at Balu. Who is Balu? Balu is a person receiving the service from GTA. Now, if I say Balu, it doesn't make much sense. Let's forget Balu. And let's call this recipient Y. You'll understand soon why. I mean, Y is a person. Example. Okay. Now, so the service of Somu is received by Y. You have to look at Y. And basically, there are certain recipient-based exemption for GTA. This Y can be a specified recipient or non-specified recipient. Specified recipient and non-specified recipient. What if it's a specified recipient? It's going to be taxable. Non-specified, exempted. Go study who these are. Okay, specified recipients are basically registered GST persons. Okay, registered person under GST, factory, body corporate, LLP, firm, etc., etc. Just go make sure you study that. So if those recipients are going to be specified, it's going to be taxable. Other cases is going to be exempted. Who are others? Unregistered individual, unregistered casual taxable person, an entity registered solely for the purpose of deducting TDS. This is the persons over here. So please make sure you go study this. Okay, so you have to understand what are the goods-based recipients, what are the recipient-based exemptions. So once you look at this particular point, you can determine whether the service provided by GTA is taxable or not. I hope that's clear to you. Okay, so let me repeat again. The GTA has two types of exemptions. One is goods-based, the other is recipient-based. So if you look at that, you can understand this. Now there is a question. What if it is not a GTA? So I hope you're following with me. Listen to me carefully. What if this is not GTA? What do you mean by not GTA? It's transportation by road, but he did not give a consignment note. So it's not a GTA. Okay, what happens then? It is actually exempted. Okay. So what did I say? If you are a GTA, GTA can have goods based exemption, recipient based exemption. If you are not a GTA, forget the goods, forget the recipient, forget everything, you are going to be exempted. I hope that's clear. Okay, so if that person is a GTA, you know how to identify the taxability. If it's not a GTA, you know how to identify the taxability. Are you clear? Okay, now I want to teach you one important amendment over here. Okay, so you might have heard about an app called Porter. Okay, Porter. So just this app, Porter. Okay, they provide a service called local delivery. Okay, so if you look over here, imagine there is a e-commerce operator who is providing local delivery service, like the example I gave you, Porter. And imagine you are using some service from this e-commerce operator. Correct, you're using the app from this e-commerce operator. Okay, now you know what happens? Listen to me very carefully. Sometimes this particular supplier, so you know that there's a supplier providing through eco, right? This supplier will give you consignment note. Sometimes they will not give you consignment note. Are you with me? They can give you consignment note, they will not give you consignment note. Okay, what happens now? Listen to me. If they are giving you consignment note, we will say that, okay, that supplier is GTA. Do not say that. Why? Because the definition of GTA has been amended to exclude local delivery services. The definition of GTA has been amended to exclude local delivery services, which means if you are a person who is supplying this local delivery service through e-commerce operators, you will not be treated as a GTA. What is the impact of this? So even though you are providing consignment note, you are not GTA. What do you mean by that? None of the exemptions mentioned for GTA will be applicable for you. It does not matter what goods you take. It does not matter which recipient you give the service to. It does not matter. It's always going to be taxable. Got it? Are you clear? Okay. Now, imagine you are not providing consignment note. You are not GTA. Already not GTA. So anyway, we know that this supplier providing local delivery through e-commerce operator, they are never going to be GTA. Even if they give consignment note, even if they are not giving consignment, they are not going to be GTA. I hope it's clear to you. So as they are not GTA, listen to me very carefully, as they are not GTA, any exemption applicable to GTA is not applicable to them. So it's always going to be taxable. Now comes an interesting point. I already told you, if the supplier is not GTA, it's going to be exempted, correct? This exemption is also not applicable for local delivery. These are all amendments related to these topics. Okay, so what is the impact of that? The impact of that is, if you are a person providing local delivery service through any e-commerce operator, done. It's going to be taxable. That's the primary point. Now, students who have already learned 9 subsection 5 knows that why government is specifically saying it's going to be taxable, because the tax will be paid by the e-commerce operator. That's the reason. Okay, so I hope this much points are clear to you. All good? Perfect. Now, let's come back to GTA. If you look at GTA, you already know that how to identify the taxability. Okay, you look at this. Now the question is, what if it's taxable? So we have a GTA, you looked at all the exemption story, you understood it is taxable. Then please understand the charge is going to be RCM. GTA by default, the charge is going to be RCM. Okay, fine. Now, if the charge is going to be RCM, is it always RCM? No. GT has an option. If they want, they can opt for forward charge. Do we have any other person like this? Yes, other. We discussed about other, right? Other also has the option of maybe opting for forward charge with similar conditions. Look at the conditions. So keep this in your mind. Now, if you are a GTA, I told you have option for either forward charge or reverse charge. By default, it is going to be RCM. If it's RCM, the tax rate is 5%. These are the very few areas where you have to study tax rate. Now, if it's under forward charge, you have two rates possible. It can be 5 or 18. This is an amendment that came some time back. Before it was 12%. Now 12% is removed from that, it's 18%. So if you're opting for forward charge, it's 5 or 18. What's the difference? If you're opting for 5, no ITC. 18, ITC can be claimed. That's a topic regarding GTA. So take a quick moment, quickly revise what are we told about GTA right now. Okay, just make sure that you have a thorough understanding. Okay, sure. Got it? Okay, so please understand that the one line summary of if local delivery is getting way too confusing, just understand this. Local delivery is always taxable. That's the one line summary. Local delivery is going to be taxable. The local delivery will not get any exemption related to GTA or non-GTA. Easy. Local delivery is always going to be taxable. Now, once local delivery is taxable, who pays the tax? The tax will be paid by the e-commerce operator. That we look at 9.5. When we revise 9.5, look at that. Easy. Done. So with that, we are done with GTA. Okay. The next point is renting of residential dwelling. Renting of residential dwelling. So if you look at the screen, you have a chart over here. Okay. This chart is something that you have already you already have in your study material. If you do not have, you can write it down. You can pause it and write it down. Okay, fine. So if you are a person renting residential property to another person, to know if it's taxable or not, the first question you're going to ask is, why is this other fellow taking it from me? If that person is taking for residential purpose or not. If it is for residential purposes, you have to see if it is rented by an unregistered person, it's going to be exempted. What if it is a registered person? It's going to be taxable and reverse charge. What if the purpose is not at all residential purpose? What if it's a commercial purpose? It's going to be taxable. 100%. Who pays the tax? Depends upon the receipt is registered or not. If the receipt is registered, RCM, unregistered, forward charge. That's the basic concept. So you can just quickly look at this chart. Just see if you can clearly understand it. It should be fairly easy for you to understand, but yeah. All right. All right. Okay. Now, Again, if you have any doubts, you can just leave it in the chat box. Like there will be some time delay between when you enter the chat over there and when I read it over here. So if it's like, if it's a very confusing area, I'll be explaining that to you, or if you have any other doubts, you can just text me, okay? If recipient is unregistered, then forward charge only applicable. Depends, no. If the recipient is, you're talking about generally, no. No. For that, you should have a clear idea regarding registration. Even if recipient is registered, there can, I hope you're talking about generally, not about the specific case. So if you're generally asking me, even if the recipient is unregistered, there can be cases where RCM triggers. For example, in the case of GTA, we never look whether the recipient is registered or not. Okay, so there are situations where RCM can trigger even if the recipient is unregistered. I hope that's what you asked. Okay, if you need any further clarification, you can leave me a WhatsApp message. I'll come back to you over there. Okay, let's continue. So you're done with this, right? So let me quickly give you an example for this, so you will have an understanding. Okay. Again, I'm just showing you just 1% of the usual PPTs I show, but yeah. Okay, this is how you understand this. Imagine there is a lady. This lady owns this house. Okay. She has a residential dwelling and she's renting into this particular lady. Example. The first question you have to ask is, hey ma'am, why do you need this house? She says it's for residence purpose. Great. We cannot make any decision with that. We have to ask whether this person is registered or not. She says she's not a registered person. It's going to be accepted. That's what we look in the chart, right? Now, just look at this. Try to identify. It's given to HDFC Bank. You're asking why? Residence purpose. Maybe for employees. Next question, registered or not? They're saying yes. What happens then? Just think about the answer in your mind. It's going to be taxable and RCM. Okay. Now, what if this fellow is renting it out and he is taking this for an official purpose? If it's official purpose, you can immediately say something. This is going to be taxable. Next question is whether this person is registered or not. Okay. This person says yes. It's going to be RCM. Okay. Now, what if it's like this? All right. Forward charge. As easy as that. Now, always keep something in your mind. If it's forward charge, okay, the tax will be paid by the supplier only if the supplier is a registered person. Just keep that in your mind. I hope you already know this. If you do not, I'm just clarifying it for you. If the supplier is registered, only then the forward charge will trigger. Alright, if supplier is unregistered, there is no forward charge, there is no charge. GST will not be triggering. Okay. Now here, there is another important point. See, look at a hostel. Let's take an example of a hostel. Imagine this hostel is rented by this lady. She's a student. It's going to be taxable because, listen to me very carefully, the exemptions that we already learned. Renting of residential dwelling to an unregistered individual is exempted for residence purpose, correct? Renting of residential dwelling to an unregistered person for residence purpose is exempted. So if you look over here, yes, this lady is getting this hostel, but this provision very clearly says this entry is not at all applicable for hostels. So now we are confused. Are government planning to tax hostel, the students in hostel? No, because this has a separate exemption entry. If the value of supply is less than or equal to 20,000 per month and this person is minimum staying there for 90 days, is going to be accepted. Got the idea? The value is less than or equal to 20,000 plus there's a minimum stay of 90,000 is going to be completely exempted. As easy as that. Okay. So what I'm trying to ask you, what I'm asking you to do is just go look at the exemption related to this. Make sure you have a thorough understanding of the exemption. Okay. That's good. Now comes the next very important point. This was an amendment some time back, not a very latest amendment, but a couple of attempts back this came. We are actually renting a residential dwelling. Sorry, we are renting an immovable property other than residential dwelling. It's an immovable property other than residential dwelling. What happens if you are renting this? How do you identify the charge? Here, first we have to see the supplier is registered or not. If the supplier is registered, it's going to be forward charge. What if supplier is not registered? You look at the recipient. See if the recipient is registered or not. Okay, what if the recipient is registered? It's going to be RCM. That's a basic concept. Okay, supplier registered, forward charge. Supplier not registered, then look at recipient. Recipient registered, RCM. Clear? But now comes the question, what if the recipient is unregistered? If the recipient is unregistered, don't say forward charge, because we have already established that the supplier is unregistered. You got the idea? Okay, I have a supplier, I have a recipient. Okay, when I'm looking at it, if the supplier is registered, he pays a tax. If supplier is not registered, I look at the recipient. If recipient is registered, he pays a tax. If recipient is unregistered, don't say forward charge, because supplier is already unregistered. There is no charge. Easy. Now, the same case. I have a supplier, I have a recipient. Supplier is unregistered. Recipient is registered. So I say, great, the recipient pays a tax. But there's an additional point over here. If the recipient is under composition scheme, it's again not reverse charge. So what happens if it's not reverse charge? Again, do not say forward charge, because this fellow is unregistered. I say no charge. Look at the chart. See if you can understand it. Take a moment, quickly revise. All good, right? The next point. Next, I'm going to quickly teach you. We are actually talking about lease of land. Lease of land. Okay, so very easy to understand. If there's a person called A, he's leasing his land to B. He's leasing his land to B. Lease of land is a supply. Okay, it's going to be taxable. Okay, who pays a tax? It's very easy. Look at the lease period. If the lease period is less than 30 years, forward charge. More than or equal to 30 years, reverse charge. Done. Cannot make it easier than this. Okay, so if you are leasing a land, there are two parties. Look at the lease period. Less than 30, forward charge. More than 30 or equal to 30, RCM. Okay, just quickly think about it. Take a minute to quickly study that. So if you're revising along with me, along with the session is done, you should be able to have a thorough revision of all the topics we're looking at. All good? Okay, perfect. Now, the next point we are going to look at is security services. Okay, we're going to look at security service. Okay, just listen to me very carefully. This is actually a bit tricky. Usually when this point is asked in examination, students actually get very confused. I'll tell you why. Just listen to me carefully. Here, the first thing we are trying to see is whether the supplier is a body corporate. So simply let me give an example. Let's say there's a party called A. Okay, so party called A providing security service to B. First focus on A, this fellow. Asking, hey, are you a body corporate? If the answer to that is yes, forward charge. So keep that in your mind. Security service, supplier is body corporate, forward charge. Okay, now the question is, What if supplier is not body corporate? So supplier is body corporate, I told you it's going to be forward charge. What is supplier is not body corporate? If the supplier is not body corporate, then there's an interesting point. We have to look at the recipient. Okay, so you know what? We'll have the tendency to look whether the recipient is a body corporate, but unfortunately, no. We're looking at whether the recipient is registered. That is the important catch. If the recipient is registered, it's going to be RCM. If the recipient is unregistered, it's going to be forward charge. That's the catch. Okay, think about it. Security service, what is the first thing you see? Supplier is a body corporate or not? Supplier body corporate, forward charge. Supplier not a body corporate. Look at the recipient. But interestingly, we are not looking whether the recipient is a body corporate. No, we're looking whether the recipient is registered or not. So supplier will be individual, partnership firm, etc. Look at the recipient. Recipient is registered, it's going to be RCM. Other case is going to be forward charge. Okay, this is all about security service. Done? Easy. Okay, done. Now, we told that if the recipient is registered, it's going to be forward charge, right? Here, there are two more things that you should keep in your mind. If this recipient is registered, but under composition scheme, it's going to be forward charge. Okay, if it's registered, but under composition scheme means, which means RCM will come only if it's a regular scheme. Under composition scheme, it's going to be forward charge. Easy? Done. Now, if they are registered only for the purpose of section 51, you know what 51 is? TDS TCS. If they are registered only for the purpose of deducting TDS under section 51, again, this is going to be under forward charge. So I've given you a chart over here. Just look at this chart. See if it's clear to you. Fairly easy, correct? Okay, done. Okay, the next point is renting of motor vehicles. This is the last trickiest portion of RCM. After this, we are done with the revision of RCM. I have left a few of RCM points, like for example, transfer of development right. That's all very easy. You can just read it on your own. Those are very easy to read. Just read it on your own. Okay, I have covered almost 90% of RCM. Just very few ones without any complication I have left it. Just read it on your own. Okay, for example, there is this RBI overseeing committee, all those topics, not very important. You can just read it. The last important one that I'm going to talk about is renting of motor vehicle. Okay, renting of motor vehicle. Okay, when you're renting motor vehicle, you actually pay some money, right? The first thing you have to see is whether it is with fuel or without fuel. Why do you see this? If it's without fuel, it's going to be forward charge. Nothing else to be studied about. Done. What if it's with fuel? If it's with fuel, you have to see whether that supplier is opting for the rate of 5% or 18%. Okay, why? If it's 18%, if it's going to be 18%, you can claim complete ITC. And it's going to be forward charge. You remember, it's kind of like the GTA case, right? 18%. You can ITC you can claim and it's going to be forward charge. What if you're opting for 5%? If you're opting for 5%, ITC is restricted. That means the same line of business you can claim the ITC. That's something you have already discussed. You should have already studied this. Okay, restricted ITC. If you have not, just go and read that restricted ITC. Now, if it's under 5%, the question is what is the charge? The charge is basically depends upon whether the charge basically depends upon whether the supplier is body corporate or not. If the supplier is body corporate, the charge is going to be forward charge. If supplier is not body corporate, you look at the recipient. If the recipient is body corporate, it's going to be RCM. It's easy. Okay. Sorry. Okay, so let's come back. I'll just give you a chart to quickly understand that. We look over here. See, look at this chart. You quickly understand the same point. So if there is a motor vehicle for renting, two types of rate: with fuel, without fuel. Without fuel, forward charge, done. With fuel, 5%, 18%. 18%, no restriction on ITC, it's going to be forward charge. If it's 5% restricted ITC of input service of same line of business. We are not done yet. Then there's a follow-up question. What if the GST is 5%? Who pays the GST? Look at the supplier recipient. Body corporate, any person, forward charge. Non-body corporate, body corporate, RCM. Non-body, forward. Got it? Just have a quick look at this chart. Okay, so I hope it's clear to you. With that, we're done with that. So with that, we have covered all major reverse charge mechanisms. So if you look at it, we have taken almost what? Almost 1 hour. In 1 hour, we have completely quickly revised all reverse charge mechanisms. So if you were with me looking at these provisions, you should be able to quickly revise all these reverse charge mechanisms. So I've told you I've left few. Just read that on your own, not very important. All the complicated ones I have quickly revised. Okay, I think it's better that we take a 10 minutes break. Okay, we are not done with the chapter charge. There's one more topic to discuss over here. That is 9 subsection 5. And we'll practice one question as well. Okay, just to get an overall idea. So let's take a quick break of 10 minutes and we'll come back and continue. Okay. Okay, let's continue. Okay, now the next topic that you have to look over here is 9 subsection 5. In this chapter, the next important concept is 9 subsection 5. What is 9 subsection 5? 9 subsection 5 says that there are some services when supplied through an e-commerce operator, the GST should be paid to government by the e-commerce operator and not by the supplier. Okay, so usually, let's say there is a supplier. Right? Let's say there is a supplier, there is an e-commerce operator, there is a customer. What happens is when the supply happens through e-commerce operator, usual case, commonly, the GST should be paid to government by supplier. That's a default provision. But the government can notify some services. Okay, notified services. If some services are notified, then for those notified services, the GST should be paid to government by the e-commerce operator. This is a concept of 9.5. And did government notify any service? Yes. Government has notified 5 services. Okay. So let's see which all are these 5 services. The first service is basically transportation. Okay, transportation. The second is accommodation. Third is housekeeping. Next is local delivery. And the last one is restaurant. Okay, these are the 5 services notified. Transportation, accommodation, housekeeping, local delivery, restaurant service. Okay, so if these 5 are the notified services, who pays the GST? ECO should pay, right? So in the case of transportation, e-commerce operator should pay. So I'm just going to quickly show an example so you have a clear idea of what I'm talking about. Let's say okay, let's say this particular lady, she's planning to book a particular car in Uber. So we have a supplier, we have a recipient, and we have the e-commerce operator, the person in between. Right, fine. Now let's say when she's booking the cab, the total charge is 1000 plus 50, that is 1050. What happens is she'll pay 1050 to Uber, but Uber will only make the payment of 1000 to the supplier because 50 should be paid to government by Uber. Very easy. This is a basic concept of 9 subsection 5. Okay, fine. So the same case is applicable for all these 5 places: accommodation, housekeeping, local delivery, and restaurant. All good? Okay, now this is the basic idea. So again, this is basically notified under notification number 17/2017. Make sure you thoroughly read 2017, it's very important. And there are some additional points to be looked at. For example, the first point was transportation, correct? Yes. In transportation, there's a catch. What is that? Usually we know that ECO pays a tax. ECO. But there's an exception to that. So usually ECO pays, but there's an exception. What is the exception? If the vehicle is an omnivan, and supplier is a company, only in this case supplier pays. All other case ECO pays. That's the basic concept. So let's say the vehicle is omnibus. So if you have a doubt what is omnibus, you can read it over here. Okay, this is the meaning of omnibus. Basically big vehicles, right? So if you're booking that particular vehicle through the e-commerce operator app, just see who the supplier is. If it's an individual, if it's a firm, if it's an LLP, it's all fine. The ECO will pay the tax. But if the supplier is a company, company has to pay the tax. That's only exception to this particular rule. Okay. Now, if in the other cases, for example, imagine the vehicle is not omnibus; it's a usual car. Eco pays a tax. Even if the supplier becomes liable for registration, still eco pays a tax. That's the basic concept. Okay, done. So we are done with transportation. Okay. Now the next question is, what about the other three? Okay, totally we have five, right? After transportation, the next was housekeeping, accommodation, local delivery. In these three cases, we know that eco pays, but there's a catch. If the supplier is liable for registration, or let me just put it supplier registered for the sake of simplicity. Supplier registered, supplier pays. If the supplier is unregistered or not liable for registration, then eco pays. That's a basic point. Okay, this is commonly applicable for housekeeping, accommodation, local delivery. Now, if you have not known about this, local delivery was subsequently added as an amendment to this. Earlier, local delivery was not there. Subsequent local delivery was added to this, and we know why. Because local delivery, anyway, it's going to be taxable through e-commerce operator. They will not get GTA based exemption. They will not get non-GTA based exemption. So, 100% going to be taxable. Which is who pays the tax? The eco pays a tax. If the supplier is unregistered. If supplier registered, supplier pays a tax. Easy. The next case is restaurant. When we talk about restaurant, we are basically talking about the various apps like Swiggy, Zomato, etc. Swiggy, Zomato, etc. So we usually say supplier pays, but there's a catch. You have to see whether the supplier, that is a restaurant, is located in a specified premise. Okay, or not. I'll explain what specified premise is. If the supplier is located inside a specified premise, then who pays a tax? Supplier pays a tax. If it's not inside a specified premise, then eco pays a tax. So we have just one question remaining. What do you mean by specified premise? Okay, there's a slight amendment to the definition of specified premise. Okay, fine. So if you have not already checked the amendment, listen to me carefully. I'll explain what the amendment is. Okay, so yeah, see, this is the definition of specified premise. I want you to take a moment, just completely read through this explanation, then I'll explain it to you. Just read through it. Hello. Okay, I hope that's good. I'm just getting a call. Just a moment, I'll come back. Okay, you can keep reading that portion. I'll explain that to you. All right. Okay, so sorry for that. Let's continue now. Okay, now, so what do you mean by specified premise? We're talking about restaurant service, right? See, specified premise means this restaurant is actually situated inside a hotel. And in the previous year, one of the rooms in that particular hotel had a tariff of more than 7,500 rupees. So let me just quickly give you an example for that. Let's say there is a hotel. Okay, it's called Ramus. Let's say Chai Kada is a Malayalam term, but yeah, it's Ramus. It's basically a hotel. Okay, now what is a restaurant? Let's say it's a restaurant. So if you're ordering food from this restaurant, who pays the GST? Swiggy pays the GST. Okay, now even if it's a fine dining restaurant, let's say like Jake's restaurant, the story remains the same. The GST will be paid to government by the Swiggy. Okay, now let's say there's a restaurant called Phil's Restaurant and they're providing service through Swiggy. We say GST will be paid by Swiggy, but if this Phil's Restaurant is situated inside a hotel, let's say Supreme Hotel, and the room rent for this particular hotel is 1,000 rupees, still Swiggy pays the GST because the cutoff is 7,500. Now, let's say there's a hotel called Lakshmi Hotel. Inside that, there's a restaurant called Luke's Restaurant, and Swiggy is basically Swiggy is basically providing restaurant service through them. And who pays the GST? Swiggy pays the GST. But when we checked the room, we understood that one of the room has a rent of 8,000 rupees. It's more than 7,500. Then the GST will be paid to government by Luke's Restaurant and not by Swiggy. That is the difference. I hope you understood the concept. Okay. So if you read over here, they are specifically saying the premise from where the supplier has provided in the preceding financial year. So the room rent you have to check in the preceding financial year. Hotel accommodation service having the value of supply of any unit more than 7,500 per unit per day or equivalent. That's it. Okay, that's clear. Now, this is something that you might have already discussed in the class. There are two more additional points. Even though I have a hotel, okay, or let's say I have a restaurant, the restaurant is inside a hotel, but I'm not providing any hotel service. Let's say it's an independent restaurant, or I have a restaurant inside a hotel. That hotel is providing room accommodation service, but the rent is less than 7,500, which means we immediately say that that restaurant is not inside a specified premise. But I now have an option to declare my particular premise as a specified premise. Even if my room rent is less than 7.5k, even if I'm not at all providing room rent service, I can declare that my restaurant is a specified premise. The question is, why do I want to declare like that? I will have to pay the GST. Now you'll be wondering, why am I taking that headache? If I am paying that GST, then what happens? Then I can claim ITC. That's the predominant point. So I can declare myself. That is point number B and C. If I'm an already registered person, I can declare my premise as a specified premise from 1st Jan till 31st March. Any time between that date, I can declare my office as a, my premise as a specified premise. Then I have to pay the GST. Or I can even have an optional declaration. If I am under new registration, this is optional under existing, this is under new registration. If I'm just getting registered, once I apply for registration, I'll get an acknowledgement, right? Saying that, hey, your application is great, we look into it. That acknowledgement. After receiving that acknowledgement, within 15 days, I have to declare to government, hey, government, I am a specified premise. That's it. I hope that's clear to you. Just have a quick look at it. You already read it, right? So I hope it's clear. All right. With that, we're done with 9 subsection 5. Easy. Okay. So with that, we have quickly completed the revision of the chapter called charge. And I have discussed all amendments. One amendment was this. I already discussed that. The next amendment was, this is not a new amendment. This is a previous amendment. I already told you. Like earlier, under the motor vehicle, the rates were 12%, 5%. But by the amendment, it's going to be 18%, 5%. Already discussed. Easy. Then there is amendment. Next amendment is basically GTA services. Again, I told you 12%, 18%. That changes there. We already discussed that. If you need this PDF, just WhatsApp me after the class. I'll just send it to you. Okay. Now, the next amendment is, the addition of local delivery service. The addition of local delivery service on 9.5. It's not a very new amendment. Already discussed, but done. These are the changes in the chapter charge. All good. let's quickly practice a question to have an overall idea regarding this. Okay. Let me just take the question for you. Let's look at this question. Okay. This question. This was asked for 2025 Jan examination for CA Inter itself. Just look at this question and see if you can understand how to deal with it. Okay, try. Okay, I hope you're all done with that particular question. Now let's try to look at the how to identify the answer. Okay, so what the question? The question says that just a second. Is it clear for you guys? No, there's some clarity once on it. Okay. Okay, fine. The question says that there's a company called Newton Limited. Okay, a registered person in Indore, Madhya Pradesh. So when you're reading the question, please make sure that this person is a body corporate because it's Newton Limited. It's a company. Okay, it's in Indore, Madhya Pradesh. So location also you received. Provides details of the following transactions carried out during the month of June. So we are trying to see what happened in the month of June. Keep all this in your mind. Okay, fine. Now they're saying that they've given a lot of information. So I usually give a tip when you're reading the question. First, read the first para. Usually what I ask you to do is read the last para. So let's try to see what you're supposed to find out. You're required to compute the GST payable by this person, by this company under reverse charge basis for the month of June. Are we talking about the month of June? Yes, we are. So perfect. So this is a very peculiar question. We're trying to see what transaction, what amount should be paid by this person under RCM. The first thing you have to see is you have to look at only the cases where this person is acting as a recipient. The Newton Limited acting as a recipient. And as you've already done with the question, you can see that in all the cases, this person is acting as a recipient. So that's done. Perfect. Okay. Let's try to find out the charge. Okay. Look at the first case. Paid remuneration to Mr. Madan for the services rendered by him in the capacity of director. So I'll just one more thing. Just quickly read the additional information as well. Okay. All the above figures are exclusive of taxes. Perfect. You know what that means. The GST rate is 1899 ICS. Okay. Turnover in the preceding year is 67 lakhs. Why have they given that the turnover in the preceding for 67 lakhs? There are certain areas where we have to say whether the entity is big or small. All right. For that, they have given the previous turnover. So if you want to use it, just use it. We'll see. The first case, paid remuneration to Mr. Madan. So if you understand that, the amount given here is not GST. It is the actual amount paid. They have asked you to identify the GST payable. Okay. Paid remuneration to Mr. Madan for the services rendered by him in the capacity of director. Company deducted TDS under section 192 salary and 194J professional other services. The gross payment was 8.5 lakhs and 11.5 lakhs. Okay. So the moment you get this, you have to understand that 11.5 lakhs was paid by deducting TDS under 194J, which means that person is not acting in the capacity of an employee. So this is going to be supply. But this is not supply. Done. Now, once it's supply, what happens? The charge is going to be reversed because service provided by government, right? Sorry, service provided by director, right? It's going to be RCM. So out of this 20 lakhs, you have to understand that you can split it into two. Out of the two, the 8.5 lakhs will not attract GST. The 11.5 lakhs will attract GST under RCM. That's the basic concept. These questions you can actually get from your ICS website, okay, from the BOS website. Okay, but you can just look at the year if you want, 25 Jan. Look at the question. Okay, done. Now, paid rent to Indian Railway, registered in Madhya Pradesh for its property located in the same state, which was taken on lease by the company, 1.25 lakhs. Okay, now it's service provided by Indian Railway by renting of the immovable property. What happens here? Do you remember that? I told you if government is renting the immovable property, we have a provision. But that is not applicable for Indian Railway. That's not applicable for Indian Railway. Indian Railway is always going to be forward charge. So this charge is going to be forward. I need not pay GST on this. I means the Newton Limited. My party need not pay GST. The supplier has to pay GST. Indian Railway has to pay GST. This is going to be forward charge. Easy. Next case. Paid XYZ Security Private Limited for providing security service to warehouse across the state. Security agency is not registered under GST. Okay, now this is an interesting case. Let's try to identify. Okay, first of all, we have to understand that in the security service, you remember I told you that's a bit peculiar case. We have to first see if the supplier is a body corporate or not. If the supplier is not body corporate, you have to see the recipient is registered or not. That's the point. Here, the person providing the security services is XYZ Security Private Limited, which means they are a company, body corporate. The charge is going to be forward. Okay, they have said that security agency is not registered under GST. See, charge is forward. If they are not registered, don't pay GST. That's it. It's not my headache. The only provision is whether this transaction is RCM or not. No, because RCM can trigger only if the supplier is not a body corporate and received a registered person. Here, the supplier is a body corporate, so the charge is going to be forward charge. Okay, I need not pay GST on it. Good. Next one. Paid fee to local municipal corporation for renewal of the company's factory license. So this is actually again service provided by government. Okay, it's a very cunning point. Service provided by government, and this is other service, not any of the initial. This is other service. Okay, how do we deal with the other service? If it's other service, you have to understand that usually we look whether receiver is a business entity. Yes, it's business. Then we look whether they are big or small. We have already given in the question that they're big entity, which means it should be taxable and RCM. But there's an important catch. You remember me talking to you about a limit of 5,000 rupees? Yes, this value is less than 5,000. It is going to be exempted. You got the idea? It's going to be exempted. That's what I told you. You have to very clearly study those charts, all those provisions. Okay, so if you look over here, the payment of RCM happens only in one particular case. That's the first 11.5 lakhs. All other case, it's either exempted or not supply or it's in forward charge. Okay, fine. So I hope you clearly got the idea. Okay, with that we are done with that particular question. I hope that's good. Perfect. Okay. I'll give you one more question for practice and we'll wrap with charge. One more question. Okay, just look at, I'll give you a question. 1 second. Okay, just try this question. Try to do this question. Provides the following information pertaining to supply made in the month of March. Okay, in the month of March. Okay, fine. Now let's try to see whether what's the question, determine the GST liability of all in one. So basically you have to see what GST he has to pay. Okay, let's see. First case, he is providing direct selling agent to Y Bank Limited. So direct selling agent, if you remember, direct selling agent, the RCM will be triggered only if the supplier is an individual. Supplier is not an individual. Supplier is a partnership firm. Okay, so therefore this is going to be under forward charge. We have to pay the tax. Okay, this is a question asked for CA final, but you guys can deal with it. It's easy. Okay, next, provided security services to ABC Private Limited, a registered person under GST. So remember, security services, what's the first thing you have to see? Supplier is a body corporate or not. Okay, so in my case, you can see that in the case, my supplier is not a body corporate. Okay, if the supplier is not body corporate, what do you see next? Whether the recipient is a registered person. Don't make a mistake, be very careful. If you look over here, yes, the recipient is a registered person. Okay, it's going to be RCM, recipient pays the tax. Okay, provide security service to PSR trust, an unregistered person. Same story, supplier is not a body corporate, recipient is unregistered. It's going to be forward charge. Now I have to pay the GST. Okay, done. Next, provided renting of motor vehicle to Amaze Tours Limited. Okay, and in the, if you read the additional information, it's already given that the motor vehicle is basically 2.5. It's basically CGST, SGST. 2.5 means it's basically 5% tax. Okay, they've basically opted for 5% tax. Okay, so in that case, what happens is, we know that it goes that chart, the 5% chart. We have to see supplier is a body corporate or not. Supplier is not a body corporate. Okay, if 1 second, there's an insect topic. Just a second. Okay, fine. So the supplier is a, yes, correct. We are seeing the supplier is a non-body corporate over here because it's a partnership concern. Provided a body corporate. So the charge is going to be RCM. charge is going to be RCM. The next case, provided renting of motor vehicle to Preeti and Co. Renting of motor vehicle to Preeti and Co. is CA firm. Okay, so what happens if the recipient is a CA firm? If the recipient is a CA firm, it's basically a partnership firm. Okay, which means charge is going to be forward. Non-body corporate. It's going to be forward charge. The next point is availed representational service from PB and Co. So if you understand that 1, 2, 3, 4, 5, all these points are actually basically the output supply. But this particular point is basically input supply. This is the purchase. Availed representational service. Okay, now how do we deal here? What do we do over here? If you are availing representational service from someone, okay, that's basically legal service. What will be the charge? We have to say the receiver is a big business or small business. Remember that? If it's a big business, it's taxable RCM. Small business is going to be exempt. This question is very tricky because they're saying that we are right now dealing the month of March. Okay, this company started functioning in the month of February. If you miss that point, you'll get a wrong answer. In the month of February, which means this business was not in existence in the previous year. It's a small business. This is going to be exempted. Got it? That's the basic structure of this particular question. A very good question. I hope you all clearly understood this question. All right, fine. So I hope we had a really good revision for the chapter. Charge. This is a big chapter, but we had a really good revision. Okay, fine. Let's take a break. Okay, let's take a break for 10 minutes. After the break, we'll be looking at the chapter value of supply. Okay, we'll take a break of 10 minutes and look at the chapter value of supply. So I'm just focusing on the most important chapters to quickly revise. As you all know, value of supply is a very, very important chapter. Let's look at the chapter value of supply. All right. Let's look at next chapter, and that's basically value of supply. Okay, value of supply. So if you look at it, you can understand that I'm going as per the order we actually saw over here. Okay, so first we understood if the transaction is supply or not. Okay, then we saw if it's charge, forward, reverse. This XM portion I'll be taking a quick session. I'll come to it. Okay, so supply and charge is done. Next we are going to look at what is the value of supply. Okay, what is the value of supply? Okay. Now, see, to understand the value of supply, you have to look at the transaction, and we'll have a supplier and we have a recipient. When supplier is making some kind of supply to this particular recipient, we have to see what is the value of supply, right? Okay, the value of supply will always be transaction value. Value of supply will always be the transaction value. So we have a following question. We have a follow-up question. What do you mean by transaction value? Transaction value is the price agreed between this supplier and recipient if they are unrelated. Supplier and recipient must be unrelated, and price must be the sole consideration. Okay, what do you mean by that? There should not be any consideration in kind. See, for a transaction to be supply, yes, there can be consideration in kind, but in this particular case, if you have to accept the transaction value, consideration should not be in kind. So the question is, what happens if the consideration is in kind? We cannot use the transaction value. Then what will we do? We look at the rules. That's not applicable for CA interest, so let's forget that. Not required. Okay, easy. We got it right. Perfect. Now comes a follow-up question. If we have the transaction value, is that the final amount? No. There are some additions to be made to this. There are some additions. Okay, and are we done? No. We have some deductions. So the question is, what are the additions to be made? Basically, there are 5 different additions to be made. Okay, the first addition is any tax other than GST. Okay, what do you mean by that? The supplier is collecting a particular tax from the customer, and that tax is not GST, some other tax. It should be added to the value. Okay, what's the next point? Third party payment. Third party payment. What do you mean by third party payment? In third party payment, the recipient has made a payment to a third party on behalf of supplier in relation to supply. I hope you are very clear with this particular point. I'm not going to have a detailed discussion, quickly revising it. Basically, the supplier was supposed to pay somebody. Recipient paid that to that person. Okay, it should be added to the value of supplier to recipient. So the simple point is, any payment made by recipient to a third party on behalf of supplier in relation to supply. The students who have attended my class, we see an example with Rocky Buy. So remember that. I'm not going to the detailed explanation, but yeah, the third party payment should be added. What is the next case? Incidental charge. Okay, all incidental charges should be added to the value of supply. Okay, perfect. What's the next thing? So we have 15 to A, B, C. Next is any interest, late fee, etc. for delayed payment of consideration. Any interest, late fee, etc. for delayed payment of consideration should be added to the value of supply. The last thing you have to add is subsidy. But when you are adding subsidy, please keep in mind that you need not add government subsidy. Okay, correct. Okay, correct. You need not add government subsidy. Okay, so subsidy can be two subsidies, government subsidy, non-government subsidy. You have to add non-government subsidy. Government subsidy does not form part of consideration. So that's fine. So you add these 5 points, you get all the additions. Now deductions. How many deductions do you have? Basically, you have only one deduction, and that is basically discount. You can deduct discount, but this discount can be of two types. One is pre-supply, the other is post-supply. Okay, what do you mean by pre-supply discount? Pre-supply discount is a discount that you can directly get from the invoice. You can directly get from the invoice, and it's already mentioned in the invoice. You can deduct it. It is deductible. It is deductible. Now, post-supply discount is a discount that is not mentioned in invoice, because this discount is coming into effect after the supply has already happened. Invoice is already issued. Can this supply be deducted? The answer is yes. But there are two conditions to be satisfied. Okay, the first condition is there should be agreement beforehand. Even before the supply happened, there should be an agreement. What is the second condition? The second condition is ITC reversal by the recipient. ITC reversal by recipient. Next condition. Okay, so if that condition is satisfied, yes, you can actually reduce the discount. I hope that is fairly clear to you, very easily understandable. Okay, so you understand what ought to be deducted. Now, when this deduction, you have to understand that this post-supply discount will be usually given using a credit note. Keep that in your mind, because they can give in the question, they can give that either they will give you the direct information, the supplier gave a discount, or they can trick you. You know what they will do? They will say supplier actually provided a credit note. Credit note is nothing but discount. Okay, but for this to have effect, there should be agreement beforehand. And I think that's fairly easy for you guys to understand. Okay. Now, one important clarification over here is when you're adding all taxes other than GST, you can ignore TCS under Income Tax Act. That need not be added to value of supply. I've already tested that for exam. Fairly easy. It's all good. Okay, so this is all about value of supply. These are the additions and deductions to be made. Okay, for CA Inter, it's very easy to learn. Now, I want you to have a clear idea who related person is. I'm not having a detailed discussion over here. Make sure you clearly know who related person is. Okay, and inclusions I've already discussed. We had a brief idea. Okay, perfect. Now there are some clarifications regarding discounts. Make sure you have a clear idea regarding that. For example, staggered discount, periodic discount, second discount, no claim bonus. These are topics we have had a detailed discussion in class. I'm hoping that you will have a quick revision on your own. Okay, if you want one-line summaries, I'll just give that to you. For example, staggered discount, it is deductible. You can deduct it. Okay, periodic discount, deductible. I'm just giving you one-line summary, deductible. Secondary discount, not deductible. What is secondary discount? Discount given without any agreement beforehand. That is secondary discount, cannot be deducted. Okay, next is no claim bonus. Yes, deductible. No claim bonus can be deducted. Keep that in your mind. Okay, now we have some further clarifications over here. These are all latest amendments. Okay, we have some further amendments. These are all new clarifications, but all amendments. Okay, let's try to see what these are. Okay, I would say that this is actually a bit tricky, so please pay close attention. We'll have a detailed discussion. Okay, the first clarification is relatively easy. This clarification is already there in the amendment PDF. Okay, if you want the amendment PDF, you can WhatsApp me. I'll give you this particular PDF. Okay, I'll share it to you. Okay, those who are attending me live, you can actually give. I already gave you the number. Or once I upload this video after this class is done, of course, this video will be there on YouTube, and I'll be giving you the phone number will be given in the description. So you can just look at the description and WhatsApp me if you want this PDF, or if you have any doubts, yes, you can WhatsApp me over there. Okay, perfect. So the first clarification. Okay, just quickly read through this clarification, then I'll explain it to you. Easy. I'll explain this to you. See, we have a supplier. We have a supplier and we have a recipient. We have a supplier and we have a recipient. Okay, fine. Somebody have asked me whether it's applicable to CA final. I'm assuming that you're asking me whether it's applicable to CA final. Yes, this amendment is applicable for CA final as well. CA final has a few more amendments in this chapter. Okay, and if any CA final students are attending this, all the topics I'm talking now is applicable for your CA final as well. But your latest amendments are not yet notified by ICA. Once that's done, I'll be doing a separate session on amendments for you guys. Okay, this is only for CA. Okay, fine. Supplier and recipient, and the supplier made a supply. Okay, after the supply was given, after the supply was done, the supplier is now giving a discount. Okay, and this discount is post supply. Fair, easy to understand. Is a possible discount. The question is, can this discount be deducted? No, never. Okay, this discount cannot be deducted. Now there is another question. See, let's say the value is 1 lakh. I'm giving you a value as well. Let's say the value is 1 lakh. Okay, and GST is 18,000. The discount given is 10,000. We have already established that this discount cannot be deducted from the value. That's all good. Perfect. Yes. Now the question is, see, once this discount comes into picture, when the recipient is making payment to supplier, he will pay only 90,000 and GST 18,000. The GST remains 18,000 because the value of supply is still 1 lakh. It's not 90,000. Alright. So there was a doubt. See, actually, you did not make the payment of 10,000, right? Okay. So should the recipient reverse the ITC equal to 10,000? Under the question. There is even a provision. If the consideration is not paid within 180 days, the recipient has to reverse the ITC. Remember that. So we had a doubt whether the recipient has to reverse the ITC for this 10,000. The provision says no. Okay. Because the clarification says that, see, yes, the value of supply is still 1 lakh, right? It's still 1 lakh. Okay. And you have already paid the entire GST of 18,000 to that as well. So we are hereby clarifying that even though you did not make that entire 1 lakh as payment over, you have made only the payment of 90,000, the ITC of that 10,000 need not be reversed because this is not a discount covered under section 15.3. You need not deduct it. That's a clarification. This is not a new information. Actually, even when we study in the class, we already know this. But government has now very particularly clarified this. Just read this. Just have a quick read again. See if you can understand it. And I hope that's clear. Okay, fine. The next clarification is actually going to be a bit tricky. Okay, so let's take some time. Let's say maybe 5-10 minutes to properly understand this clarification. Okay, as I said, this is an amendment. Okay, a very new amendment. Let's check it out. Okay. For this, I do have a presentation, but I'm not going to the presentation. Just write down the example. So you can write it down along with me. Okay, that will be easier for you to understand as well. I'm not going to show a detailed example, a quick example to understand this. Okay. Let's say there's a manufacturer. Okay. Let's say there's a manufacturer. Okay. This manufacturer sells their products to a trader. So we have a trader over here. And this trader will be selling this product to the end customer. All good? Perfect. Now, this manufacturer is selling this product to this trader, let us say, for rupees 10,000. For rupees 10,000. Okay. Of course, this plus GST. This plus GST. This trader is planning to sell this product to the customer for rupees 15,000 after marking up his profit or whatever. Okay, both these amounts are excluding GST. So I'm just going to give you a basic idea about the GST as well. For example, here let's say GST is rupees 1,800, 18% GST. Okay, and here let's say it's 2,700. All good? All clear? Okay, fine. Now, you know what happened? First focus over here. This transaction already happened. The manufacturer sold a good to the trader for rupees 10,000 and GST 1,800. That's all. That already happened. Imagine it already happened. Subsequently, now manufacturer is giving a discount to the trader. And this is a post-supply discount. Okay, let's say for rupees 1,000. 1,000 rupees discount. Now we already discussed this point. Can we deduct this from the value? No, there is no agreement. No agreement out of the blue. So this is a secondary discount. Post-supply discount. This is a secondary discount. Okay, so we are not reducing this 1,000. So the value remains intact. The value is still going to be 10,000 rupees. But still, the trader gets a benefit of 1,000 rupees from the manufacturer. So if you understand that, this is a very peculiar point. When the manufacturer is giving a discount to trader, it is almost as if the manufacturer is paying rupees 1,000 to him. Just try to visualize what I told right now. That's actually true, right? If I am the manufacturer, you are the trader. Okay, I sold you item for 10,000 rupees. You paid me 10,000 rupees. You paid me GST 1,800. Subsequently, I am telling, hey trader, do not worry, I am giving a discount of 1,000 rupees. I will be giving the 1,000 rupees back to you, right? If I am giving you a discount of 10,000 rupees, sorry, not 10,000, 1,000 rupees, it is as if me providing you with a benefit of 1,000. It's almost as if I am giving you 1,000 rupees. I hope that idea clicked. It's almost as if I am giving you 1,000 rupees. So you have 1,000 rupees. Okay, I hope that's clear. If that's not clear, the parts that follow will not be clear. I hope that's clear. You got 1,000 rupees. Okay, fine. Now look at this trader. The trader was planning to sell this good for 15,000 rupees. For 50,000 rupees plus GST 2,700. So listen to me carefully. They're just planning. Okay, but now look at here. The trader got a discount of 1,000 from the supplier, right? So now the trader is thinking, okay, great. I'll do one thing. I will change the price from 15,000 to rupees 14,000. Why do they do that? Because they already got a discount of 1,000 from the manufacturer. So if you're reducing the price for the customer, the sales will go up. That's a good idea, right? That was a plan of trader. Okay, so there's a discount of 1,000. Now the GST will change because this is a pre-supply discount. The GST will be 14,000 into 18%. That's going to be rupees 2,520. Got it? Clear? Now comes an interesting play. Listen to me carefully. After the supply is done, this customer will make a payment of 14,000. Okay, and GST is 2,520. We already know that. But now a doubt arises. The doubt was, what did the trader get? The trader got 14,000 rupees from the customer. Yes, correct. The trader also got 1,000 rupees from the manufacturer. You remember when you studied the definition of consideration, we have learned that the consideration can flow from a third party. The consideration need not flow from the recipient. So there can be a doubt that the trader is wondering, oh God, now I received 14,000 from the customer. I received 1,000 from the manufacturer. I actually received 15,000 rupees. So should the value be 15,000 rupees? This was the doubt. This was the thing that government had to clarify. Okay, I hope the question is very clear to you. Now the government has come up with a nice clarification, a very favorable clarification. Government says these two are two independent transactions. This is transaction number 1, transaction number 2. They have no interconnection. How can we say that there is no interconnection? This manufacturer has not made any promise to the customer that the good will be given a reduced price. There is no agreement between the manufacturer and the customer. As there is no agreement between the manufacturer and customer, the value of supply for the transaction between the trader and the customer will be rupees 14,000. I hope that's clear. Okay, but an important point. If there was an agreement between the manufacturer and customer, the manufacturer is telling customer, hey customer, do not worry, I have so many traders, you go buy from any product, you will get for 14,000 rupees. But the manufacturer is saying 14,000, the trader sells for 15. So how can the trader reduce the price? Manufacturers give a discount to the trader. Okay, in that case, there is an agreement between the manufacturer and the customer. If there is an agreement between the manufacturer and the customer, then when the trader is providing it at a discount, the value of supply will become 15,000 rupees. That's the primary point. So one line point is very simple. If there is an agreement between the manufacturer and customer, then the trader's value of supply will be 50,000 rupees. If there is no agreement between the manufacturer and customer, then the trader's value of supply will be 14,000 rupees. I hope that's clear. Okay, so this is the entire story. I'll give you the note. Just try reading it for 1 minute. Just think about it. It should be clear to you. Okay, look at this issue 2. Read it thoroughly. I hope that's clear. Okay. Now, similarly, if you understood this, the next clarification is very easy to understand. That is, let's say there is a manufacturer, trader, customer, same story. But here, you know what happens? The manufacturer is providing some discount, and this is a secondary discount, okay? Possible discount. And then what happens is this trader is actually doing some kind of advertisement. Okay, they're actually spending some money on advertisement. So the question arises, see, the discount given by the manufacturer to the trader, can that be treated as the consideration for the advertisement service done by trader? Because when the trader is doing advertisement service, ultimately who gets the benefit? The manufacturer gets the benefit. It's their product which is getting sold over here, right? Okay, the question was, if the trader is actually supplying, if trader is actually giving some advertisement service, can that be treated as, can the discount given by the manufacturer to trader be treated as consideration for providing advertisement service? Here's the question. Very similar to the previous question. And the answer is very, very easy. If an agreement exists between the manufacturer and trader saying that, hey trader, please do the advertisement, I will give you some discount. If an agreement exists like that, we can say that yes, it is actually going to be supply. Yes, the discount given will be consideration for supply. Okay. If there is no agreement, if there is absolutely no agreement, then it's all cool. Nothing to be worried about. If there is no agreement, then the manufacturer giving a discount to trader will not be considered as a consideration. Fairly easy. If you understood the previous clarification, this is easy to understand. Just read and see. Issue number 3. I hope it's clear. Just try reading it. Issue number 3. All good? Perfect. Now, there is one more clarification here. This clarification is actually very important. It's related to DCA. Okay, DCA, Delft Agent. I'm just going to quickly give a run through to that. That's an important clarification. Okay, not a very detailed explanation. Quickly understand. So there's a principal and there is a DCA. DCA is basically an agent, Delft agent, and there's a customer. Principal supplied some goods to the customer. Customer supplied the goods to, sorry, principal supplied some goods to the DCA. DCA supplied to the customer. Okay. Now, the DCA already made the payment to the principal. The customer delayed in making the payment to the DCA. And when the customer finally paid the payment to DCA, they actually paid some interest as well. The question was, will this interest attract GST or not? Okay. The reason for that question is predominantly interest is usually exempted from GST, right? Okay. So the question was whether interest attract GST or not. The government says that depends upon whether this agent is whether the agent is covered under para 3 or not. In supply we discussed para 3, right? So you have to look at who issued the invoice. If this person is not an agent as per para 3, not an agent as per para 3 means the invoice is issued by the principal. That's the predominant point. He issued the invoice. That's the meaning of this. Okay, if he issued the invoice, what happens? Basically, this principal made a supply to the customer. This agent is acting as an intermediary. There is no receipt or sale by the agent. So we can say that when you remember the agent actually paid the principal the full amount initially, that can be treated as the agent giving a loan to the customer. Agent giving a loan to the customer. In that case, the interest is going to be exempted. Let's quickly read this. The interest is going to be completely exempted. I hope that's very clear to you. Interest is exempted. Now, what happens if this person is not an agent as per para 3? If it's not an agent as per para 3, the DCA actually issued the invoice. The invoice is issued by the DCA. What happens then? Then it's an interesting point. If the invoice issued by DCA, the DCA actually made the supply to the customer. The payment was not received in a proper time. The interest is received as a result of delayed payment of consideration. Remember, it will be added to the value of supply under 15(2)(d). So the one line summary is very easy. If the agent is covered under para 3, interest will attract GST. If the agent is not under para 3, interest will not attract GST. Got it? Just look at the chart, wrap it up. This is already asked for the exam as a main numerical question. Look at the chart, see if it's clear. I hope that's clear. Now let's practice a couple of questions in this chapter. Okay. Okay, this question was asked for 2026 Jan. Just try to do this question. Take a couple of minutes, just try to do. Done. So let's have a quick discussion. Okay, fine. So here, there's a company called Buses Fry Limited, registered in the state of Rajasthan, sold one machine to BGC Limited in the state of Rajasthan in the month of May. Contract price was 8.5 lakhs, exclusive of tax and discounts. Okay, and GST is charged extra. The following amounts have been charged by from BCG in addition to the contract price. So already we have the contract price. This is your transaction value. Now we're going to see whether the following things are to be added or not. The first thing, there's an outward freight charge, and that's basically for 42,000. The contract was to deliver machine at BGC's factory. That is on a F4 contract, free on road contract, which means the supply will get completed only when the goods are delivered to the recipient's location. Okay, so what happens then? If the goods are delivered to recipient's location, then it means the entire supply will become a composite supply, where the basic supply is supply of good and the transportation charge will become part of composite supply. Or easier, you can think of the incidental charge. Anyway, both are fine. Okay, it can be treated as incidental charge as well. Okay, now what happens then? You just add it both. Okay, you have to, not both, sorry, this particular term you have to add. Next, the Fry Limited offers a trade discount of 3% on the contract price, which is recorded in the invoice. The clue is this part, which is recorded in the invoice. If it's recorded in the invoice, it's a pre-supply discount. If it's a pre-supply discount, can you deduct it? Yes, you can deduct it. So you deduct the 3% from the value of supply. Okay, next. Fry normally gives an interest-free credit period of 15 days. Okay. Failing which, the interest at 1.5% per month or part thereof shall be charged. The payment was made after 18 days from the date of issue of invoice. However, Fry Limited waived the interest payable for the delay. Actually, there's a delay of 3 days, right? Usually they charge an interest, but here they did not charge. I very commonly see students adding this particular point to the value of supply. Please do not do that, because the supplier has waived the interest. If supplier do not want interest, why do you add it? Ignore that. Easy. Okay, next. Fry Limited received the following subsidies directly linked to the price. So it's a subsidy, and the next important point is it is directly linked to the price. So please keep in your mind that subsidies will be considered for value of supply only if it is directly linked to the price. In my case, yes, it's directly linked to the price. So what do we do? 60,000 from one non-government organization, 80,000 from state government. So we have two subsidies, one from government, one from non-government, and both the subsidies were not deducted while arriving at 8.5 lakhs. So that 8.5 lakhs amount, we arrived at that amount without deducting subsidy. So let's analyze one by one. The first subsidy is actually from non-government. Okay, fine. Non-government subsidy, it's already there in the value. We cannot deduct that. It should be part of the value. So this remains as such. Nothing is to be done. You have to give the note, but nothing is to be done. What about this 80,000? It is from state government on sale of such machine, and it's from government. If it's from government, it does not form part of your value, which means you can reduce this. So reduce the 80,000. That's it. So take the total given value, add 42, reduce 3%, nothing to be done over here, reduce 80,000, you get the value of supply. Okay, perfect. So with that, we are done with that value of supply. I hope that's clear. All right. Let's do one more question and we'll take a break. Okay. The next question, I want you to do this particular question. Okay. Fine. The 2025 May question. Let's do this and we'll wrap up this chapter. Take a look. Okay, so let's try to understand how to deal with this question. Okay, and the question is compute the taxable value for the month of July. Okay, and most of the cases are given for the month of July. Let's see. First case. So what's the person? Who's the person? Mr. Ajay, registered person, is providing the following details about transactions entered into him by him in the month of July. He sold 3,000 units of goods to Wellness Pharma at rupees 400 each. Under section 206C1H of IT, he is required to collect TCS of 2,000 from the Wellness Pharma. He included 2,000 as well in the invoice. Okay, he can include that in the invoice, but we will not include that in the value of supply, because we just read that when we are talking about value of supplies, any tax other than GST will not include TCS. So we ignore that. Okay. All good. Next point. Under a contract with the state government, he sold 1,000 units of goods to families of economic weaker section. So basically, he sold it for, his price was 400, but he sold only 200 because the balance 200 was received by him from government. What happens here? This is a subsidy, and this is subsidy is actually provided by government. Government subsidy does not form part of value of supply. You can ignore that, which means the value of supply will be 200 into 1 lakh. That's going to be, 200 into 1,000. That's going to be 2 lakhs. Easy. Next, he issued credit note worth rupees 1.5 lakh net of GST. So 1.5 lakhs is basically GST amount. Net of GST. That's the value amount as discount to its registered dealers who purchase more than 5,000 units between October to December under so scheme on 110. The above discount was given provided there was reversal of IDT by the customer. Okay, so what's the point over here? Basically, I made a supply last year. Okay, and for that, I've told it's last year, right? Yeah, now it's July. Supply was made last year. So I'm telling my customer, hey customer, if you're going to make the payment within the what was the point? If you make more than 5,000 purchase, I'll give a discount. Now I have noticed that they have made a purchase more than 5,000, so I'm giving them a discount. Can this be deducted? The answer is yes, because we already have agreement with them that if they are making a purchase of more than 5,000, because there's even a condition for reversal of ITC, which means I'm telling the recipient, hey, I will give you the discount, but you have to reverse the IT subsequently, which means agreement already exists. This is a post-supply discount for which ITC is being reversed and there is agreement beforehand, which means this value can be deducted from the value of supply. So when I'm computing the total taxable value for the current month, I can reduce this value because this is acting as a discount. Okay, so this can be reduced. Next point is a bit tricky. So I am selling some goods to some old age home for a consideration of 1 lakh. The normal value is basically 2 lakh. An NGO registered under so-and-so Act of Income Tax gave them a subsidy of 30,000. Okay, now this is a bit tricky because many students, what they do is just add this 30,000. You cannot add it. Why? See, the total price was 2 lakhs. The actual price charged now is 1 lakh. Okay, the price charged now is 1 lakh. Now, the interesting part is this NGO, when they gave the subsidy, this subsidy was not to affect the price. This subsidy was given as a blanket subsidy. So if when you look at it, you have to understand that subsidy can be of two types. One is price linked, the other is blanket. It's called blanket subsidy, blanket donation, etc. Only price linked subsidy will be added to value of supply. Blanket subsidy are to be ignored. So you have to do what you have to do. You have to ignore this 30,000 subsidy. The value is going to be just 1 lakh. Do nothing with regard to that subsidy. Okay. Next one. After analysis of sale report of the first quarter, he decided to give discount of 1% to shopkeepers whose total purchase exceeded 25 lakhs. Total discount given to such shopkeeper was 1.3 lakhs. Okay, fine. Now, after analysis of sales report, which means we are doing the analysis right now. Right now, when we're thinking about the sales report, which means there is no agreement with the customer. We have not made an agreement with the customer. This is an outright subsidy, secondary discount. Can you deduct that? The answer is no. You cannot deduct that. So this discount cannot be deducted from the value. Okay, now I have to add one more point with respect to point number 3, that issued credit note. Okay, you have to understand that this credit note I am raising right now in the month of July. The supply happened in the last month, October to December. You have to keep a point in your mind that time limit to raise credit note is not yet lapsed, has not lapsed. What's the time limit? The 30th November of subsequent financial year. If this credit note was raised after that particular date, then this value cannot be deducted because the time limit is already over. In this case, the time limit is not over. It's all well within the. Okay. So I hope that's clear to you all. Okay, all perfect. So I hope that's clear. Okay, with that we are done with the chapter value of supply. Okay, now, okay, let's do something. Let's take a break. Let's take a break for 30 minutes. Okay, so basically I am giving this to you as a lunch break. Take a break of 30 minutes. Come back to me after the break. We look at the chapter place of supply. Okay, so when I'm uploading this to YouTube, probably I'll be cutting off those breaks, but right now the students are attending. There are some students attending online, right? So you students, you can actually come back to me after, let's say, 30 minutes. All good? Okay, see you soon. So come back in 30 minutes. All right. So hope you're all back. Let's move on to our next topic. Next, we're going to look at place of supply. Okay. So this is going to be a very quick revision of all the provisions under the chapter place of supply. Okay. For CA intermediate. Okay. As it's for CA intermediate, we'll be checking at only section 10 and 12 of IGST Act. These are two main topics you have to look at. Okay, fine. So let's look at this particular topic. Okay, so let's start with section 10. Okay. Okay, is the screen visible now to all of you? All good? Can you please respond in chat? The screen is visible. My voice is clearly audible, correct? All good? It's all okay. Okay, perfect. Okay, fine. So let's look at the next topic, place supply. Now, we are going to start with section 10. Section 10 talks about place of supply of goods. Right? There are different cases under like A, B, C, D, E. I'm going to look at it one by one. The first case is supply involves movement of goods. Supply involves movement of goods. So let's say good is moving from one location to other. What is a place of supply? Wherever the movement terminates. Okay, wherever the movement terminates. That's going to be your place of supply. All good? Fine. Now, second point is, what about build to ship to? Build to ship to mechanism. What do you mean build to ship to mechanism? Under build to ship to mechanism, there is a person, let's say A. A ordered some goods from B. A placed an order with B. Okay, but the goods are being delivered to a third person called C. So here what happens is the bill goes to this person. Okay, the bill goes to this person, but the shipment goes to this person. Such a transaction is called bill to ship to mechanism. Okay, now how do we identify the value of supply for this particular transaction? So not value of supply, I'm talking about place of supply for this particular transaction. Okay, it's actually really easy. We have to take the principal place of business of third person. Principal place of business of the third person. Who is the third person? Here A is a third person. Principal place of business of A is actually the place of supply. Okay, you have to understand that in such transaction, there are always going to be two supplies. One supply is just like we discussed from B to A. There is another supply actually from A to C. So this is supply number 1, this is supply number 2. How do you identify the place supply from A to C? Here you use the provision supply involves movement of goods. Okay, where will the movement terminate? The movement terminate at the location of C. That's called the place of supply. I hope that's clear to you. Okay, so let me give you a quick example. Let's say I am situated in Cochin. Okay, I am ordering some goods from Coimbatore. Okay, and so basically I am in Cochin. Let's say I am the person now in Kochi. Okay, I am ordering something from Coimbatore. Let's say Oscar. Oscar is in Coimbatore. I am ordering the goods from him. Okay, but the goods are being delivered to, let's say, Balaji. Balaji, let's say, is in Chennai. Okay, now when I'm ordering the goods from Coimbatore to Cochin, the place of supply. Okay, you have to understand that I am ordering the goods, I am asking Oscar, I am giving him the order, and I am asking him to deliver it to Chennai. So Oscar will actually give me an invoice. The place supply of this invoice will be Cochin because that's my principal place of business. Okay, now the question is, what about the supply made by me to Balaji? I have made a supply to Balaji. Okay, what is the place supply? Okay, you have to understand that the goods actually moved from Coimbatore to Chennai. The movement terminated in Chennai, the place supply will be Chennai. I hope that's clear. This is asked for CA in exam. Okay, both the places supplies were asked to be identified. I hope it's clear. Okay, done. The third case is, what if there is no movement? If there is no movement, the place supply will be location of goods at the time of delivery. Okay, which means you come to my shop, you're getting a good, there is no movement. I'm just giving you the good, right? The place supply will be wherever the good is. My good right now is in my location. That's going to be a place of supply. Okay, that's it. So that's all done. I hope that's clear to you. Now, fourth point. Fourth point talks about over-the-counter sales to unregistered persons. Over-the-counter sales to unregistered persons. What's the place of supply? To identify the place of supply here, first of all, you have to see whether the recipient's address is available or not. Available or not in the invoice. If it's available, it's the location of recipient as per the address. If it's not available, it's location of supplier. How can we see if the address is available or not? To understand that, you have to remember that when you studied section 31, under 31, there's a provision that if the supply is made to an unregistered person and if the value of supply exceeds 50,000, address is mandatory. And if the value of supply does not exceed 50,000 rupees, then it is optional. You remember this provision. You can connect that with here. So if you have the address in the invoice, great. That's going to be your value of supply. That's going to be a place of supply, not value of place of supply. If the address is not available, then the location of supply. Okay, I think that's relatively easy for you guys to understand. Okay, done. Now, let's look at the next point. This is fourth point. Looks at the fifth point. Okay, this is goods assembled at a point. If the goods are being assembled at a location, what is the place of supply? Wherever the goods are assembled. Location of assembly, where the assembly happens. Okay. Place of assembly. Easy to understand? Done. The last point is goods supplied on board a conveyance. the goods supplied on board a conveyance. Where will the place of supply? The place of supply will be wherever the goods are taken on board. The location where the goods are taken on board. Okay, let's say there's a train that starts from Trivandrum moving all the way to Delhi. If the goods are taken on board, let's say from Ernakulam, any person can buy the good any time during the train journey. The place supply will be Ernakulam. That's where the goods are taken on board. With that, we're done with that. So let's quickly revise. If there is movement of goods, where the movement terminates. Bill to ship to principal place of business of third person. If there is no movement, where the goods at the time of delivery. Okay, over the counter sales to unregistered person. Address available means that location of recipient as per the address. Address is not available means location of supplier. Now, goods assembled at a point, location of assembly. Okay, goods supplied on board a conveyance, goods taken on board. These are going to the place of supply. I hope that's clear to you. Okay, so with this, we are done with the case of goods. Now we are moving on to the case of services. Okay, let's revise services. So before I start revising service, just quickly look at goods, have a revision on your own and see if it's all clear to you. Okay, so somebody has asked a doubt that installation example. Okay, fine. Let me give you an example. Let's say, for example, I am a supplier. I am supplying. I'll give you a good example on screen. Like just because you asked for example, I'm not showing example for each and every transaction because that's going to take a lot of time. But if you have any specific doubt, you can ask me. So, okay, let's say for example, let's example CR. That is Cochin National Airport Limited. Okay, so what happened was they are actually approaching a company called SafeMax Limited. They are located in Trivandrum and they're actually planned to buy a scanning machine. So you have this airport scanning machines, right? So they're planned to buy the scanning machine. So how the scanning machine comes is first one particular part comes like this in one truck, in another truck, another part comes, and the final truck, another part comes. And finally, this is completely installed. Okay, this is the meaning of assembled at a particular site. So where is the machine assembled? It will be assembled in the airport, right? Cochin National Airport. Place supply will be Kochi. Okay, so I do have detailed examples for each and every point. I'm not showing that one by one because this is a rapid revision. But if you have any specific doubt, you can ask me. Okay, so somebody has asked me about PA and work-life balance. Okay, so that's something that's completely dependent on how you work. Okay, like if you look at any profession, if you look at work-life balance, it's completely how you deal with it. You cannot say that, like for example, CA has work-life balance or a teacher does not have work-life balance. No, all profession has that. The predominant thing is, are you interested in learning about laws? Do you like learning about laws? Do you like learning about accounting laws? Are you interested in applying that in a practical level? Okay, do not opt CA just because you're good in maths. That doesn't make much sense. Okay, if you're good in maths, that's good for any profession you choose. But if you like law, the basic thing is once you start studying CA, you understand that it's not a game of maths. It's a game of law. It's different. You look at DT, you look at IDT, you look at accounts, you look at law, you look at tax. Anywhere you look, it's basically going to be a game of law. So if you're interested in that, you can choose. But work-life balance is not something that any profession can specifically attach to. It depends upon how you balance the work. An out of topic question, but just addressing that question as somebody asked that. All right, fine. Let's move forward. So with that, we are done with the place of supply of goods. Now we are moving on to the place of supply of service. Okay, fine. So in service, there are going to be different cases under section 12 up till 1214. There are different cases. So the first rule that we are going to learn is general rule. Okay, the first rule is going to be general rule. What does that mean? If the case that we are going to look at is not covered under any of the following cases, we use general rule. A good example will be the service provided by a started accountants. The service provided by a started accountants is not covered any specific rules. So we take actually general rule. Okay, now what is the place of supply as a general rule? You have to first look at whether the recipient is registered or not. If the recipient is registered, the place supply will be location of recipient. Done. If the recipient is unregistered, then you see if address is available. If the answer to that is yes, place supply will be location of recipient. If the answer to that is no, it will be location of supplier. As easy as that. Just giving you one quick example to have a quick revision regarding this. Okay, let's say there's a chartered accountant. This chartered accountant is located in, let's say, Kochi. This CA is providing audit service to Hindustan Union Limited. They are registered in Bangalore. What's the place of supply? Recipient registered? Yes. Place supply is going to be location of recipient. That's going to be Bangalore. Imagine he's providing service to Mr. Shah Rukh Khan. Okay, he's a registered person in Mumbai. What service does he provide? GST filing. Is the recipient a registered person? Yes. What's the place supply? Location of recipient. That's going to be Mumbai. Okay. Imagine he's providing service to this fellow, Mr. Pontidurai. He's actually from an unregistered person from Chennai. And what is the work that we provide? Income tax filing. First thing we have to see is the recipient registered? No. If the recipient is not registered, we actually see whether the address is available or not. As you know, for income tax filing, we need Aadhaar, PAN, etc. So definitely the supplier will be having address of recipient. It's going to be Chennai. Now, if at all there is a case where, like most of the cases, definitely the address of the recipient will be available. If let us say there's a case where address is not available, but all a case comes like that, then the place supply will be location of supplier. Easy? Very easy to understand, right? All good? Perfect. So that's all about service. General rule. The next thing we are going to see is services related to immobile property. Any service related to immobile property. This is a very easy topic to understand. Here, the first thing you have to take in your mind is we are not bothered about whether the recipient is registered or not. Do not look at that. We are not bothered. Okay, then what else should we look at? We are looking at whether the immovable property is in India or outside India. That is our predominant concern. Whether the immovable property is inside India or outside India. Okay, we looked at it. We decided that the immovable property is inside India. The place of supply will be location of immovable property, wherever the property is located. What if it's outside India? The place of supply will be location of recipient. Quickly look at the provision. Just have a quick look. I'll give you an example. Okay, so let's look at an example. See right here. Okay, let's say that TCS is located in Bangalore and they are actually planning to construct a new building in Kochi. Okay, for this, they're taking the service of a lady called Mrs. Mary. Let's say she's a designer or an architect. Okay, she's providing designer service to TCS. We would like to know what is the place of supply. So if you can look at here, you can see that the supplier, the designer is in Kochi, receiver is in Bangalore. And we can see that the immobile property is being constructed in Kochi. As this is the designing of an immobile property, this is a service related to immobile property. The place supply will be location of immobile property. And where is that? That's going to be Kochi. Easy. Alright. Now the only question is, what is immobile property is considered in Mumbai? Place supply will be Mumbai. What if this is considered in Chennai? Place supply will be Chennai. Easy. Now comes the interesting question. What if this property is considered in Dubai? Place supply will not be Dubai. Place supply will be location of recipient, and that's going to be Bangalore. Got the idea? Okay, perfect. Now, when you're looking at this particular provision related to immobile property, I gave you a very brief idea, but I want you to have a detailed study about what all services are covered over there. Even though I quickly gave you the services, you have to look at what all services are covered. There are a lot of services related to immobile property, even this renting of immobile property, construction, designing, architect, estate agents, etc. etc. Lot of services are given, but for all those services, you can actually use a single chart, and that is this chart. Easy to understand. This is a service related to immobile property. Okay, fine. Next. Okay, these many services: restaurant, catering, personal grooming, fitness, beauty, health services, etc. Okay, what will be the place of supply? It's actually really easy. All these services, the place supply will be location where such services are performed. Very easy. Very easy. Location where such services are performed. Let me give you an example. Let's say this person. This is Ambika Pillai. She's a grooming artist, grooming makeup artist. She's providing makeup service to this lady, Aishwarya Rai. Okay, and she's in Mumbai. What is the place of supply? It's very easy. You have to see where the service was performed. For that, read the question, identify the clues. There's a clue that this Ambika Pillai actually traveled all the way till Mumbai to provide the service. You have your answer. Place of place where the service is performed. Service performed in Mumbai. Easy? All right, done. So that's done. The next service that we are going to look at is training and performance appraisal, or simply put, training service. Okay, training service. For training service, you have a chart. You see, if there is, so all the students who already have my study material, you can directly look at the chart. For other students, I'm writing it on the screen. If the recipient is registered or not. Reg and Reg. If the recipient is registered, the place of place is going to be location of recipient. Easy. If the recipient is unreg, the place of place is going to be where the service is performed. Wherever the service is performed. Let's look at a quick example. See, let's say there's an institute called XYZ Institute in Kochi. They're providing an advanced GST training. So both students as well as professionals can attend this. It's attended by a student, and this student is actually from Bangalore. If a student is coming from Bangalore, probably they are going to be an unregistered person, right? If the service is received by an unregistered person, the place supply will be the location where the service is actually performed. And where is the service being performed? It's in Kochi. So place supply is going to be Kochi. If a student from Kottayam, it's a place in Kerala, attends this class, same story. Place supply is going to be Kochi. But what if this lady, let's say she's a chartered accountant from Mumbai, she's attending this. She's a registered person. Place supply is going to be, yes, Mumbai. If another person, let's say this person, okay, he is a CMA and he is also a registered person from Kochi. If he is attending this class, the place supply is going to be Kochi because he is a registered person. Okay, easy. Okay, so if you understand that in this case, yes, we look at the registered person, whether that person is registered or not. So far, the only place where we did not look at, okay, two places we did not look at. First case, in the case of immovable property, we were not bothered whether recipient is registered or not. Okay, keep that in mind, it's very important. Okay, similarly, in the case of catering and restaurant service, we did not see whether the recipient is registered or not. All other cases, general rule, we checked. Okay, training and appraisal, we checked. Let's go to the next case. Next case is basically entry to events. This is the proper heading, you can read it. Okay, you're actually entering into certain events. For example, tickets. It's very easy. Wherever the event is happening, that's the place to supply. Okay, let's say you purchase a ticket for a cricket match happening in Jawaharlal Nehru Stadium, Kochi. Place supply will be Kochi. The event is happening in Kochi. Easy. It's a very easy entry. If they ask, it's a good question. I mean, it's a very easy point to answer. Done. Now, next is organization of event. So again, I'm just quickly running through the provision. Hope you have already revised all these provisions. Okay, or you have already studied these provisions. This is a quick revision. Okay, after organization of event, I'll pause for maybe 1 or 2 minutes. You can just quickly revise all the provisions we have learned so far. Okay, in the organization of event, we are talking about event management service. Under event management service, basically what we are seeing is whether the recipient is registered or not. Whether the recipient is registered or not. So it is organization of events. Registered or not registered. If the recipient is registered, it's going to be location of recipient. So far you have noticed that wherever we check whether the recipient is registered or not, the place supply is going to be location of recipient. So in this case, what if the recipient is not registered? I give a clue to the students. I always ask them to remember, if the recipient is not registered, think of it as like the service related to immobile property. Why? We see where the event is, inside India or outside India. Or event outside India. All right. Now, if the event is inside India, the place of supply will be location of event, wherever the event is. If this outside India, the place supply will be location of recipient. Let's see if that makes sense. What if registered person's place and training perform different place? I'm assuming that you're talking about a recipient who is registered, and if the training is happening in a different place, still it will be the location of recipient. As long as the recipient is registered, it does not matter where the training is actually happening. It's always going to be location of recipient. Hope that's clear. So this is all about event management service. Let me give you a few examples to quickly understand this. Okay, let's take a company called Reliance Industries Limited. They are a registered person in Mumbai. They are conducting an event, and this event is actually located in Bangalore. Okay, for this, they are taking event management service from a company called Pegasus Events from Mumbai. What will be the place of supply? It's really easy. First, we are looking whether the recipient is a registered person or not. In my question, in my example, yes, recipient is a registered person. Place supply will be location of recipient. That's going to be Mumbai. Okay. It does not matter where the event is happening. The event can happen anywhere in India. Interestingly, listen to me carefully. The event can happen even outside India. Even if the event is outside India, the place supply will be location of recipient because the recipient is a registered person. Now automatically we have a follow-up question. What if recipient is unregistered? What if our recipient is unregistered? If the recipient is unregistered, okay, let's say, for example, let's say this lady, okay, she's actually a person from, let's say, Kochi, unregistered person from Kochi, and the event is her marriage. It's happening in Bangalore. For that, they're taking services of Pegasus events. Okay, and with the place of supply, it's very easy. The recipient is an unregistered person. Look at where the event is happening. The event is happening in Bangalore. That's inside India. The place supply is going to be location of event. That's going to be Bangalore. Anywhere in India, the place supply is going to be location of event. But in the same case, if the event is happening in Dubai, the place supply will be Kochi. Why? Because this lady is from Kochi. Okay, that's why we said over here, if the recipient is registered, location of recipient. Recipient not registered, look where the event is held. Event held inside India, wherever the event has happened. Event is outside India, location of recipient. So far we are done till event management service. Okay, let's take 5 minutes break. So very quickly revise all this process up till now. All good? Okay, fine. Now, let's continue. We are done with event management service. Okay, and I'll give you one more important tip. This organization of events, the chart that we just learned, it can be used for one more important service, and that is sponsorship service. So if you remember, when we studied reverse charge, we learned how to look at the charge of sponsorship for the same service. To identify places apply, you can use the same chart. It's the same provision. Just keep that in your mind, sponsorship. Okay. Next, we're going to look at transportation of goods. Okay. It's very easy. Transportation of goods. So I'll teach it like this. Transportation of, let's learn, goods and passengers. Okay, in the case of goods, and dividing into two: registered, unregistered. Who? Recipient. I'm talking about recipient. Registered means it's going to be location of recipient. Easy. Unregistered means it's where the goods are handed over for further transportation. Goods are handed over for further transportation. All right, easy. Okay, now what if it's passengers? So what do you make goods handed for further transportation? Okay, let's say for example, I'm sending some goods. Okay, one more tip. This is applicable for goods as well as mail or courier. Okay, mail or courier. For all cases, use the same chart. Okay, fine. So for example, let's say I'm sending a mail. I'm using the service of DHL. So let's say DHL is providing courier service to me. Let's say I'm a registered person. Place applicable location of recipient. If I'm an unregistered person, the question is, to courier this, I should first hand over this courier to DHL, right? Only then they can send it to my recipient. So when I'm giving it to DHL, you have to take that location, the location where I'm giving it to DHL. Okay, that is going to be the place of supply. That's what's meant by the location where the goods are handed over for further transportation. Now, what if it's in the case of passenger? What if you're looking at the case of passenger? In the case of passengers, it's actually exactly same. It's very easy to learn. That is, if the recipient is a registered person, what will be the place of supply? Location of recipient. If the recipient is unregistered person, you know what happens? In the case of goods, it was the location where the goods were handed over for further transportation, right? In the case of passenger, we itself are moving, right? So it's where we got inside the vehicle. It is the location where we embarked. We embarked the conveyance for a continuous journey. The location we embarked the conveyance for a continuous journey. That is going to be the place of supply. Registered person means location of recipient. Unregistered person means where we embarked for the continuous journey. All good? I hope that's clear to you. Okay, perfect. That's transportation of goods and passengers. Okay, so in the case of goods and passengers, the first thing we see is whether recipient is registered or not. Registered means great, location of recipient. Unregistered means we have to see where the person embarks. In the case of passenger, embarks for a continuous journey. In the case of goods, where the goods are handed over for the transportation. Simply put, the location where the journey starts. Okay. Now, in the case of this faster transportation, there's one more important point for you to keep in your mind. When we book tickets, there can be return tickets, right? Like for example, somebody books a ticket from Kochi to Bangalore and Bangalore to Kochi. This will be maybe one single ticket, but it should be treated as two supplies. So for Kochi to Bangalore tickets, the place supply will be Kochi. because we are embarking for the journey from Kochi. From Bangalore to Kochi, the place supply is going to be Bangalore. Now, this is applicable only if the receipt is unregistered person. What if receipt is registered? You need to look at any of these provisions. We can close it in one shot. It's going to be location of recipient. Good? Perfect. So we are done with that. Goods and passengers. The next thing we are looking at is services supplied on board a conveyance. Services supplied on board a conveyance. So earlier we looked at goods, right? Okay. In every place where recipient is registered, yes. So wherever we check whether the recipient is registered or not, place supply will location of recipient. I will, you know what? Once we're done with all this, I'll give you an overall picture where all we check that. We look at that. Okay, done. So in the case of services supplied on board a conveyance, the place supply will be where the conveyance started the journey, the first scheduled point of departure. The first scheduled point of departure. Let me give you a quick example for that. Okay, this is a flight like this. Kochi, Bangalore, Delhi. Started from Kochi, landed in Bangalore, same flight took off, landed in Delhi. Now, any time during this flight, let's say somebody purchased some food and they're having it in the flight. This is a services supplied on board. This is not good. This is a service. What will be the place supply? It's going to be Kochi because the first scheduled point of departure was Kochi. The place supply is going to be Kochi. Easy. Right? Okay. I hope that's clear to you guys. All right. So we're done with service supply on board conveyance. Next is telecommunication service. That I'll quickly run through that. In telecommunication service, the first thing you have to see is whether it is a fixed line. What is fixed line? We have these landlines, right, at our homes. We used to have. Now all of us are using mobile phones, but earlier. So if it's a fixed line, the place supply will be the location where the line is installed. This has been checked multiple times for exam. Please make sure you thoroughly understand that. Okay, the location where the line is installed. Now, what if it is normal mobile connection? It can be postpaid or prepaid. If it is postpaid, the place of supply will be location, the billing address. Sorry, the billing address. It's going to the billing address. What if it's prepaid? If it's prepaid, the place supply is going to be, we have to see whether the prepaid recharge happened through voucher or through internet. Whether it happened through voucher or through internet. If it happened through voucher, the location where the voucher was sold, that's the place of supply. Internet billing address. This is the quick revision summary. So if you're installing a line, wherever the line is installed, if it's other broadband services, if it's a postpaid connection, billing address. If it's a prepaid connection, if vouchers are sold. This voucher thing does not happen commonly now, right? It's very rare now. But if at all the vouchers are sold, the location where the voucher is sold, if it's through internet, wherever the billing address is, that's going to be a place of supply. I hope that's fairly clear to you guys. All right, good. So let's look at, yeah, we're done with that. I'll give you a question after this to practice all this. Okay, done. We're done with telecommunication. Okay, next, we're looking at banking service. Okay, so simply put, it's not specifically banking service, it's financial and stockbroking. financial and stockbroking. Okay, actually very easy service. You know why? Because here we are just checking whether the address is available or not. With the supplier. So you have to understand, we are talking about financial service and stockbroking service. 99% case, the supplier will definitely have the address of recipient. We are talking about very serious service over here, right? If you have the address of recipient, it's going to be location of recipient. If you do not have, the place supply will be location of supplier. So 99% case, it's going to be this. Very rarely it's going to be location of supplier. Okay. Next is insurance service. So I hope you're either looking at somewhere in your study material, so you can quickly revise. If you're writing down, you can actually pause the video and write down, because I'm just going as assuming that you have a material over there. Next, we're looking at insurance service. This is actually very interesting because we are seeing if the recipient is registered or not. Okay, the answer can be yes, the answer can be no. Now, interestingly, even if it is yes or it is no, it is location of recipient. But there's a slight difference. Yes, it's going to be location of recipient. No, it's again going to be location of recipient, but this is as per supplier's record. As per supplier's record. Okay, what do you mean by that? Okay, I'll give an example. Let's say this person is let's say an unregistered person, and he's right now living in Mumbai. He's living in Mumbai. Okay, which means location of recipient is basically Mumbai, but his address in Aadhaar is in actually Kochi. Okay, address in Aadhaar is actually Kochi. He's availing insurance service from ICICI Prudential, a life insurance company, and here comes the life insurance. The question is, what is the place of supply? Okay, see, here what happens is, as this person is usually living in Mumbai, the location of recipient is Mumbai as per GST concept. But his Aadhaar address is Kochi, which means when he obtained the insurance, he would have provided his Aadhaar to ICICI Prudential. So what happens is, in that, the address is going to be Kochi, which means as per ICICI Prudential's record, the recipient address is Kochi. Therefore, the place supply is going to be Kochi. So as per the GST concept, the location of recipient is basically Mumbai because he's living in Mumbai, but as the address in supplier record is Kochi, place supply is going to be Kochi. I hope that's clear. Good. Fine. The last and final service that we learn over here, we look at over here, is basically advertisement service to government. Okay, I'm not going to have a detailed discussion. You can look at it on your own. It's not that important, but please understand. Usually, advertisement service, the place supply will be as per general rule. Usual advertisement service, place supply will be as per general rule. But if the advertisement service is provided to government, like this example, if it's provided to government, the place of supply will be the location where the advertisement is actually displayed. For example, let's say the advertisement is being displayed in Kerala, Tamil Nadu and Karnataka. Kerala, Tamil Nadu, Karnataka. The place supply will be all three, that is Kerala, Tamil Nadu and Karnataka. What if it's displayed all over India? Place supply will be all over India. That is a basic concept. I hope you understood that. Okay, so now that we are done with this, I'm just going to give you a quick revision of everything in one shot. Okay, so you can just flip your pages and just run along with me. Okay, what is the first case? The first case was general rule. What is a place supply in general rule? We have to see if the recipient is registered or not. So in general rule, yes, we look at if they're registered or not. Registered means location of recipient. Not registered means see if address is available. Address available. Okay, I'm not showing any examples. Yeah. Any example for which one? I got a doubt. For which example? I mean, for which provision? Just leave the message and I'll come back to it. Okay, fine. So first one was general rule. Look if they are registered or not. Advertisement. And that's example I gave you. For example, let's say central government is having an advertisement service. Is taking an advertisement service from the Hindu newspaper. Okay, and what happened was this news is actually being broadcasted, or the newspaper, it's being displayed in the newspapers in Kerala, Tamil Nadu and Karnataka. All the three states, Kerala, Tamil Nadu and Karnataka, will be the place of supply. I hope that's clear. Okay, fine. So coming back, general rule, registered or not. Registered means location of recipient. Not registered means see if address is available or not. Address available means location of recipient. Address not available, location of supplier. General rule. Immobile property. We are not bothered about registered or not. We are only bothered about where the immobile property is. Inside India, location immobile property. Outside India, location of recipient. Okay. The next one was catering service. We do not see registered or not. Location of provision. We are not looking at registered or not. Okay. Now, next was training and appraisal. We actually see registered or not. Registered means location of recipient. Unregistered means we see where the service is actually performed. Okay. So that was 3. Okay. 6. I'm talking about subsections. 6 is entry to events. Entry to events, location of event, wherever the event was. Okay. Next was event management. We see whether they are registered or not. So you can see here we are seeing they are registered or not. Here we are seeing registered or not. Here, event management we are seeing. Registered means location of recipient. Unregistered means see where the event is happening. If it's inside India, wherever the event has happened. Outside India, location of recipient. Okay. Now, 8 is transportation of goods. 9 is passengers. Both cases, we see if they are registered or not. Registered means location of recipient. Unregistered means in the goods, where the goods are handed over for transportation. In the case of service, where they embark the conveyance for a continuous journey. Okay, then we have 10. That is services supplied on board a conveyance. Services supplied on board a conveyance. We do not see if they are registered or not. Just quickly say that's the first scheduled point of departure. Just quickly note it down. First scheduled point of departure. Okay. 11 was telecommunication service. Again, we are not bothered about registered. We are looking at whether fixed line or postpaid or a prepaid. That's what we are looking at. Easy. Then 12 was banking. Here also we do not see whether recipient is registered or not. We are looking at whether address is available or not. Available means that address. Not available means location of supplier. Now, 13 we are talking about insurance. Here we are looking whether they are registered or not. Registered person means location of recipient. Not registered means still location of recipient, but as per the supplier's record. Now 14, last one talks about government services. Sorry, advertisement service to government. So you can look over here, you can understand that 1, 2, 3, 4, 5, 6. In these 6 cases, we are actually seeing whether the recipient is registered or not. If you're looking at these 6 cases, if the recipient is registered, it's going to be location of recipient. In all other cases, we have to specifically look at the specific case. So whenever you see the recipient is registered, don't immediately jump into a conclusion that it will be location of recipient. It may not be. You have to clearly understand In which all cases this happens. If you have that idea, it's very easy to understand this. Okay? Good. If a person who is unregistered from Chennai bought a good and even conductor in Cochin and asked the supplier to courier. Okay, that's a very specific case. Like there are a lot of questions to be asked. Okay, for example, the first question is, okay, you already answered it's an unregistered person. If an unregistered person, it's over the counter sales to unregistered person. The question is, did the sale already happen when he come to the Kochi? When he came to Cochin, he went to the shop or even whatever, he bought the good. So the moment the good was bought, the question is whether that supply finished over there, or will the supply get over only when the good reaches Chennai? If the supply gets over only when the good reaches Chennai, place supply is going to be Chennai. If that person bought it, then gave it back and asked him to courier it, it's going to be Kochi. That's the main point. So if you're coming to Kochi, which means we have multiple options of it can either be Kochi or it be Chennai, depends on how the transaction is dealt with. Because as long as the receipt is unregistered, it does not matter much. Because only if it's a registered person will we have the detailed issue of ITC. In this case, it's going to be really easy. Okay, so if they ask you this for examination, we can actually give an exemption. We can actually give an assumption. Assumption. That's also possible, yes. If the goods are being sent to Chennai, we can say there is movement. Then it's location of movement terminating. Anything is fine. Okay, hope that's clear. Okay, now let's practice a question. There is just one clarification in this chapter regarding advertisement sector. Make sure you understand that. Okay, look at that. If you have any doubt, you can WhatsApp me. But yeah, make sure there's a one clarification, one important clarification. There are two clarifications, right? One regarding the e-commerce operator delivery, and then there is advertisement service. Make sure you study both of them. Now I'm going to give you a question. Okay, so we'll do one thing. It's almost 1 hour. We'll actually take a break. After the break is done, we'll do the question. Okay, so I'll be leaving the question in the screen. Okay, this is the question I want you to do. Question number 14. So you do the question, take a 10 minutes break, come back, and we'll discuss the answer. Okay, all right. Okay, I hope you guys are all done. Let's look at the answers. The first case was Mr. A chartered accountant registered in Kolkata, supply service to his client in Bhubaneswar, registered in Bhubaneswar, Odisha. Okay, the question is what is the place of supply? What will be the place of supply? It's going to be Bhubaneswar, Odisha. Why? This is here we have to use general rule. First, we are seeing if the recipient is registered or not. If they are registered, it's going to be location of recipient. Okay, therefore it's going to be Bhubaneswar, Odisha. Okay, next case. Mr. X registered in Guwahati has availed landline services from BSNL. The telephone is installed in the residential premise in Kolkata and billing address is Guwahati. So it's a bit tricky because they're saying that the line is installed in Kolkata, but billing address is Guwahati. In the case of fixed line, place supply is where you install it. It's going to be Kolkata. All right. Next, X of Kolkata purchased online. X residing in Chennai is traveling with an Indian airline and is provided with movie on demand service for ₹100 as on-board entertainment during Delhi-Chennai leg of Bangkok-Delhi-Chennai flight. This is services supplied on board a conveyance. Okay, in the case of service supplied on board a conveyance, what will the places supply? It is the first scheduled point of departure. The first scheduled point of departure is basically Bangkok. So place supply is going to be Bangkok. Okay. X of Kolkata purchased online tickets for Aquatica Water Park in Mumbai. Okay. Event. Entry to event or amusement park. Wherever the event is located. Therefore, it's going to be Mumbai. Okay. Z, an unregistered person of Kolkata, sends courier from New Delhi to his friend in Chennai, Tamil Nadu, while he was on a trip to New Delhi. Okay. So, this person is an unregistered person of Kolkata. He's sending a courier from New Delhi to his friend located in Chennai, Tamil Nadu, while he was on a trip to New Delhi. What's the place supply? It's going to be New Delhi, where the goods were handed over or the courier were handed over for further transportation. All good? Perfect. Next, X, a registered person in Ranchi, Jharkhand, buys shares from a broker in Patna on NSE Mumbai. Determine the place of supply. Okay, this is basically stockbroking service. So we know that if recipient's address is available with the supplier, we can assume that it is available. Therefore, the place supply is going to be Ranchi, Jharkhand. Okay, XYZ Limited, New Delhi, entered into contract with an Indian airline for supply of biscuit packets for further supply by airline to passenger in Kolkata Guwahati route. The goods were loaded in Lucknow. Okay, place supply is going to be Lucknow, wherever the goods were taken on board. There are two supplies over here. I am talking about the supply from airline to customer. It's going to be Lucknow. Okay, fine. So this is how they usually ask from this chapter. They can either directly ask you what is the place of supply. There can be the possibility of one more type of question. That is, as I discussed earlier, the first main question, they ask you what is the place of supply. Okay, I hope it's clear. So with that, we have done the revision of place of supply. Okay. So we are done with supply, we're done with charge, we're done with time of supply, value of supply. Sorry, we are now done with time of supply. We're done with value of supply and place of supply. Okay. Next, let's look at time of supply. Okay. So before revising time of supply, ensure that you have studied a chapter called invoice, debit note, credit note. Okay. Make sure you have looked at that chapter. Okay. So why do I ask you to ensure that you study that chapter? In this chapter called invoice, debit note, credit note, that is where you actually study the due dates for invoice, because that is actually required for time of supply. So make sure that you have thoroughly studied that, or now you can just quickly look at the revision that I'm going to take for time of supply. Subsequently, when you learn on your own, make sure you thoroughly understand the invoice, debit note, credit note chapter. Make sure you have a quick analysis of the chapter. That chapter by itself is not a chapter with too much mark weightage, but when compared to other topics, it can be it's very important, especially with time of supply. So let's study time of supply. That's the next topic that we are going to discuss. Okay. So time of supply for CA Inter, we are basically looking at two sections. That is section 12 and section 13. Section 12 and section 13. So section 12 talks about, okay, section 12 talks about time of supply of goods, and section 13 talks about time of supply of service. Okay. Now, unfortunately, 1 second. Yeah, I want you to give me 5 minutes time. Okay. Because the pen that I use, okay, the charge is over. I need 5 minutes for it to be recharged. Just give me 5 quick minutes. Okay. Then we'll continue session. So take a short break of 5 more minutes. Okay, I think we can get back to it. Okay, so just before the break, I told we are going to start with the chapter time of supply. The time of supply, we are going to look at two sections. One is section 12, the other one is section 13. 12 talks about time of supply of goods. Okay, now what is the time of supply? Okay, so first of all, I hope you have a clear idea what do you mean by time of supply. Time of supply is the point in time at which the liability to pay GST arises. That particular point is when you have to pay the GST to the government. So for example, if time of supply is today, the GST should be paid next month 20th. That's the basic concept. Okay, in the case of goods, the first thing you have to look is forward charge. Forward charge. Okay, so in the case of goods forward charge, when do you pay GST? In the case of forward charge, the first thing you have to see is whether the invoice is issued within due date. Invoice is issued within due date or invoice not issued within due date. Okay, if you're saying the invoice is actually issued within due date, okay, you're saying the invoice is issued within due date, the time of supply will be date of invoice. Easy. What if it's after due date? What if invoice is not issued within due date? Then the time of supply will be due date. Easy, done. That's all. You're done with forward charge. Okay, fine. So if the invoice is issued for, this is why I told you have to go study the due date of invoice from the chapter invoices. Okay, that particular topic I won't be discussing in this rapid revision point. You can just listen to these topics, but to understand the due dates, make sure you go study the chapter invoice, debit note and credit note. Okay, fine. So now you have a proper due date. See whether the invoice is issued within due date or not. If it's within the due date, the time of supply will be the date of invoice. Okay, not within due date, time supply is going to be due date. Now, for those who have already studied the due date for a quick revision, in the case of goods, you see if we have movement or not, right? So if you want due date, you see if there is movement or not. If the answer is yes, it is on or before removal. It is on or before removal. If it is no, because there is no movement, it is on or before delivery. Easy. That's how we determine the due date. Okay. Now, of course, there is continuous supply of good. That all those provisions, make sure you study on your own. I'm just giving a quick revision. Okay, fine. That's all we're done with forward charge. Okay. Now, a couple of important points over here. The first important point is here they have not mentioned anything about payment. But if you look at the actual section 12 subsection 2, they are actually mentioning you to go check the look at the date of payment. But there's a notification called notification number 66/2017. Notification number 66/17. Due to that notification, payment is no longer relevant for forward charge of goods. Payment is no longer relevant for forward charge of goods. Therefore, we are not bothered about payment. Therefore, in the case of forward charge of goods, even if you receive advance, there is no GST payment. Even if you receive advance, there is no GST payment. Clear? Okay. So with that, we're done with forward charge of goods. The next point is reverse charge. Reverse charge of goods. How to identify the time of supply? It's very easy. You should actually have 3 dates. You have 3 dates. The first date is date of receipt of goods. So you have to understand under reverse charge, who pays a tax? Recipient pays. Date of receipt of goods. The second is date of payment. Second is date of payment. The third date is 31st day from supplier's invoice. Now you might be asking a doubt. What if supplier is an unregistered person? if supplier is an unregistered person, he might not raise an invoice, right? So the question is, how can the supplier be unregistered? If you look at the chapter registration, okay, when you study the chapter registration, you can see that in the case of reverse charge mechanism, if the supplier is exclusively engaged in reverse charge transaction, he may not obtain registration. If the supplier is exclusively engaged in reverse charge transaction, he may not obtain registration. So there can be a case of reverse charge mechanism where the supplier is unregistered. In that case, should the supplier raise an invoice? No. You need not raise an invoice, but he will be raising some document in lieu of invoice because he is a supplier, right? Even though it's not a GST registered document, he will be giving some kind of document. Take that document and 31 days to it. That's what the provision says. Okay, you take these 3 dates, identify whichever is earlier. Done. That is your time of supply. In the case of reverse charge of goods, take 3 dates, take whichever is earlier. That's going to be your time of supply. Okay, so we are done with goods forward charge, goods reverse charge. Next, let's look at service. Okay, we're looking at service. First, let's look at forward charge. Here, there's an interesting question. The question is, whether the invoice is issued within due date or not? The same question. Invoice within due date. That's the question. If the answer to this question is yes, let's say the invoice is issued within due date. Yes, you have to again compare 2 dates. The first date is the date of invoice. The second date is date of payment, whichever is earlier. If the answer to this question is no, which means you have not raised the invoice within due date, then there are 2 dates. First one is the date of provision of service and the date of payment, whichever is earlier. This is how we look at it. Now, interestingly, there's a question, what is the due date of raising invoice? Okay, so you have to go study the chapter invoice, debit note and credit note. I'll just give a quick revision of that. In the case of services, the first thing you see is whether you are a banking company or insurance company. If you are that kind of company, if you're a banking or insurance company. If you're a banking or insurance company, you have to raise the invoice within, do you remember, 45 days from the date of provision of service. All other cases, you have to raise the invoice within 30 days. So normal cases, 30. Okay. Then again, you have to look at continuous supply of service as well. There is a specific point like invoice in the case of continuous supply where the due date is ascertainable from the contract. Due date is not ascertainable from the contract. All those things are in section 31. Make sure you study that. Only then you can look at this. But once you study that, this is very easy. If the invoice is issued within due date, invoice or payment date, whichever is earlier. If the invoice is issued after due date, provision or payment, whichever is earlier. I hope you understood that. Okay. Now, what about reverse charge? Okay. In the case of reverse charge, here, this came as an amendment some time back. You look at the invoice and see whether the supplier is raising the invoice or not. Or specifically, whether the supplier will be raising the invoice or not. What do you mean by that? We are seeing if the supplier is registered or not. If the answer to this is yes, so we know that supplier raises the invoice. Okay. If the answer to that is yes, then you compare 2 dates. You take date of payment and you take 61 day plus supplier's invoice. In the reverse charge of goods, we took 31. Here we take 61. Take these 2 dates, whichever is earlier. That is going to be your time of supply. Now, what if the answer to this is no? Which means supplier is not raising invoice. If supplier is not raising invoice, once you study the section 31 or study that entire chapter, you know that the recipient will do something called self-invoicing. So it's going to be date of payment or date of self-invoice. The provision says the rate of invoice issued by recipient. That is nothing but self-invoice, whichever is earlier. That's case of reverse charge of service. Okay, so in this one page, I have completely summarized forward charge and reverse charge of goods as a service. So what was the forward charge? In the case of goods, see whether the invoice is issued within due date. If the invoice is within due date, the time of supply will be invoice or payment, whichever is earlier. In the case of forward charge of service, is the invoice within due date? Yes, invoice payment, whichever is earlier. No, payment and provision of service, whichever is earlier. Reverse charge of goods, you compare 3 dates. Date of receipt of goods, date of payment, 31 day from supplier's invoice, whichever is earlier. In the case of reverse charge of service, you see whether supplier is raising invoice or not. Supplier is liable to raise invoice or not. If the answer to that is yes, then the date of invoice plus 61 days, not 31, 61, and date of payment, whichever is earlier. If the answer to that is no, which means if the supplier is not raising the invoice, then the date of payment or date of self invoice, whichever is earlier. Okay, that. There's one more important point. Wherever we look at date of payment, so we have been looking at this date of payment, right? Okay, the date of payment will actually be earlier of 2 days. The first date is the date you book. You make an entry in your books. Sorry, the date you make entry in books or debit or credit from bank account, whichever is earlier. Okay, the day you enter in your book as that I received the payment, or the payment get debited from your account or credited. Debited means if you're a recipient, that's basically when it is if you're a recipient, you actually make the payment, right? When it is debited. When you're a supplier, it's a relative dated credits. So it's debit or credit from the bank, whichever is earlier. That will be the date of payment. Okay, I hope that is clear. Now let's practice one question to get a good idea regarding this. Okay, the question in the screen, the first question, just quickly identify the time of supply. Take 2 minutes, identify the time of supply. should be done, right? So Asian Traders is a registered supplier of plastic goods. On 10th April, they are receiving an order for supplying the goods from another person, and they get the consignment ready on 14th April. So the goods are ready on 14th April. Okay. The invoice of the goods was issued the next day on 15th April. They collected the consignment on 25th April. If you look at the question, you can see that all the other information given over here that actually talk about the payment. But as we know, in the case of forward charge of goods, payment is not relevant. So you need not look at the payment. Okay, you have to understand that the payment is not relevant because of notification number 66, right? Please keep in your mind that notification is not applicable for actionable claims, specified actionable claims. So in the case of specified actionable claims, payment is relevant to identify time of supply. Just keep that in your mind. You will have to use that subsequently. Okay, and maybe not for CA Inter. Keep that in your mind because you have to study that for CA finally. But just keep that in your mind. Anyway, here, so the rest of the paras over here, this can be completely ignored by us because it's all regarding the payment. So you have to look at the first para. So we received the goods, right? When did you receive the goods? The goods was received by this person on 25th April. Receipt is on 25th April, which means 25th April is the due date. Did you issue the invoice before that? Yes, the invoice issued on 15th April. So invoice is issued within due date. So time of supply will be date of invoice, that is going to be 15th April. 15th April. All clear? Perfect. Now I want you to do this question. This is forward charge of service. It's a nice question. Question number 6, forward charge of service. Try that, please. Okay, we'll check the answers. Okay, fine. So the answer given in the chart, first, 15th, third, and fifth. Yeah, it's correct. Okay, fine. So I just quickly tell you how we got the answers. So here a CA firm is issuing invoice to the service provider to Mr. Ram on 5th August. Determine the time of supplying the following independent cases. The provision of services was completed on 1st July. So if the service is completed on 1st July, you have to raise the invoice within 30 days, which means that's going to be 31st July. In this case, the invoice was raised on 5th August. Okay, which means it's raised after the due date. What will be the provision? Oh, sorry, what will be the time of supply? The date of provision. It's going to be 1st July. Hope that's clear. Second case, the provision of services were completed on 15th July. The provision was completed on 15th July. If it's 15th July, the invoice has to be raised within 30 days. That's going to be 14th August. Invoice is raised on 5th August within due date. Yes, it is within due date. Then invoice or payment, whichever is earlier, it's going to be 5th August. So if you understand that, you're actually supposed to compare with the payment date. In the both these cases, date of payment is not given, which means we can assume that payment happens in the future. Right. So therefore, I am taking the dates that's available. Now, Mr. Ram made the payment on 3rd July, where provision of service will remain to be completed. Okay. So if the payment is made on 3rd July, payment is made in advance manner. Okay. Now, the provision of service will remain to be completed, which means the service is going to happen only in the future. If the service is going to happen only in the future, then the due date of invoice is also in the future. So I can say that right now, 5th August, the invoice is raised within due date. So what is the time of supply? It can be the invoice or payment, whichever is earlier. It's going to be 3rd July. Easy? The last case, Ram made the payment on 15th August, where provision of service remained to be completed. So if the payment was made on 15th August, where the provision is remaining to be completed, we have to understand that again the same story, the due date of invoice in the future, it's going to happen only if it is already in the future. Okay, invoice is within due date. So we take provision or payment, whichever is earlier, and the provision is basically invoice or payment, whichever is earlier. Invoice is basically 5th August, payment is 15th August. This time the earlier date is 5th August. All right, that's it. With that, the time of supply is already done. So I hope you have a clear idea regarding the time of supply of service. Okay, done. So likewise, there are, like for example, take your ICS study material. There are sufficient questions to practice the time of supply. Make sure you thoroughly practice it. Before that, I want you to do this question as well. Question number 14 on the screen. Please do this question. Easy to understand, right? Okay. So Ramu supplied certain service to Mr. Jacob on 19th May, which is charged under reverse charge. Now, Ramu is an unregistered person. Mr. Jacob issued the invoice, that is self-invoice, on 10th June. The payment was made by Mr. Jacob on 25th June. So, in this case, supplier is not raising invoice, recipient is raising a self-invoice. What will be the time of supply? It is either going to date of self-invoice or date of payment. The self-invoice happened on 10th June. Payment happened 25th June. Place supply is going to be 10th June. All right, perfect. So let's get back. Now, here there's an important clarification regarding vouchers. Okay. Important clarification regarding vouchers. This was an amendment that actually came a couple of attempts back, but make sure you clearly know this. So I'm just going to quickly explain this vouchers. Okay. Earlier, for a voucher, there was a very specific voucher means, like for example, there will be this gift vouchers or even our mobile prepaid vouchers, right? Okay. So such vouchers earlier, they used to have a very clear provision where they ask what is the time of supply in the case of voucher. Okay, but subsequently what happened was this provision has been withdrawn from the act. Okay, now government has given some clarification. Clarifications are relatively easy because when you look at these vouchers will usually be treated as some prepaid payment instrument. This voucher will be treated as some prepaid payment instrument. If you treat that voucher as a prepaid payment instrument, then it's very easy because prepaid payment instruments are recognized by RBI as money. Okay, if RBI recognize an item as money, it will not attract GST. Fairly easy. Okay, fine. So that's the first point you have to learn. You can read till here. Okay, now in certain cases, this voucher will not be treated as a prepaid payment instrument. This voucher will not be treated as a prepaid payment instrument. In that case, what happens is basically it's not recognized by RBI as money. Okay, it's not a prepaid payment instrument recognized by RBI as money. In that case, what happens is we have to treat it as an actionable claim. And actionable claims are not supplies. Actionable claim can be supply only if you have the specified actionable claim. All other actionable claims are not supply. So again, no GST. Read it. Done. Now, what if you're a person, let's say you are a trader, you actually buy voucher and you sell voucher. You're a person trading in voucher. Very easy. When you're buying voucher, no GST. When you're selling voucher, no GST. Why? Vouchers are not to be treated as supply as per the provision we read. Vouchers are not to be treated as supply. So easy. All right. Fine. Now, what if this trade is getting commission for doing this? What if he's buying and selling? Basically not buying and selling. He's acting as an agent for selling the voucher. And when he sells vouchers, he gets commission. That is going to be supply. It will attract GST. Okay. Just read these 2 points. All good? Okay. Now next question is, again, there is a person. He is basically dealing in vouchers. So voucher comes in, voucher comes out. He is a trader. The question is, what if he is doing some other marketing activity for supplying this voucher and he's getting money for that? That's going to be supply. Only the voucher will not attract GST. All other activities related to voucher will attract GST. That's this point. Okay. The next question is, what about unredeemed vouchers? What do you mean by unredeemed voucher? As the name suggests, a voucher which has not been redeemed yet. It's an unredeemed voucher. What will be the time of supply? First of all, if it's unredeemed voucher, there is no supply. It's called breakage. So technical term, it's called breakage. This transaction will have absolutely no GST impact. It will have no GST impact. I hope that's fairly easy to understand, right? All good. Clear? Perfect. Okay. So that's all regarding the expression with respect to vouchers. Please keep that in mind. Now, in both the cases, in the goods as well as service, there is one more time of supply that's important for exam. That is interest, late fee, etc. Interest, late fee, etc. What is the time of supply? In the case of interest, late fee, etc. What do you mean interest, late fee? For delayed payment of consideration. So there is a supplier and there is a recipient and there is a delayed payment of consideration. Basically, recipient is not making the payment within time. There is a delayed payment. In that case, there's going to be a in this case, there's going to be interest or late fee. There's going to be interest or late fee. This interest or late fee will attract GST. The question is, what is the time of supply? It's very easy. Whenever you receive this interest or late fee. Okay. So if you look over here, just look at this point. All good? Fine. So with that, we are actually done with time of supply. Okay. So now if you look at our initial discussion, when we started the session, I told you you have to have a clear idea about these many topics, right? So if you look at it, we are already done with the topic. We're already done with supply. We're done with charge, VOS, TOS, POS. So basically, if you look at it over a session of almost 6 hours, we have completed the revision of supply, charge, VOS, TOS, POS. Okay. So like this video will already be there in YouTube as a recording. It will be available over here. I'll be uploading it by today evening. It will be already be there, which means you can actually look at it and get much better idea when you're revising subsequently. So if you want to quickly revise charge in like less than 1 hour, you can come and watch this video and revise it off. So I hope you have a clear idea regarding this. You all have my mobile number for asking me doubts. You can ask me doubts. I'm wrapping up today's marathon session. All right. Tomorrow, again, we'll be having a session at 9 o'clock and we'll be looking at exemptions ITC topic. So very important topic, input tax credit. We'll be discussing that. Then we'll be looking at exemptions. We won't be having 100% coverage of exemptions, but all the important topics, important portions will be quickly revised by me over here. So you can quickly follow that. All right, so we will do that tomorrow. Okay, so I'm winding up the session today. See you all tomorrow morning, 9 a.m. All right, so who all are planning to attend, please come attend tomorrow's session. Or if you're not able to attend, subsequently watch the recording when you revise for your examination. So this video, like I'm predominantly uploading this video not for the students who can attend it live at the exact same time, but even for students who can subsequently look at it till the exam. All right, fine, okay. See you tomorrow.